Mm-hmm. Mm-hmm. That's interesting. Well, it certainly seems like that's the case, which is kind of a bummer. Definitely does not seem like you get past 555 after all. Although this has quite a bit of room. I'll take that with a grain of salt. Hmm. Seems kind of unlikely, but need help making new lines. Yeah, this is my chart needs to be redone, I think. Well, not like completely redone, but there's a bit of information here that's kind of not being considered because of previous expectations of where we would be today or yesterday. And I think the feeling that we had on probably on Thursday, Friday, we kept talking about how there was like an extra amount of selling. Like there's just a lot of selling going on. Seemed to be a pretty big contributing factor. And it makes sense. Most of the market, I think, is not being fooled by this pump. And that's what I was considering was like, well, you'd want to have like an actual fake out, you know. You don't want it to be just like a halfway fake out. So the market is taking advantage of that squeeze that happened when that news dropped. And I think a lot of people were selling. But I'm a bit perplexed as to why we wouldn't go higher. Like, I still look back at this and I'm like, yeah, I get the hesitation where we're at. I mean, we have a historical kind of bottom in this area going up to about 550. And if you look around 550 to 554, there's a really long-standing creek that goes back. Well, it's not super long, but it really marks the entire drop down. So it starts on in early February. It kind of starts this motion down, and there's not much else to say about it other than like, okay, well, we've been in a kind of a widening, which normally would be maybe thought of as somewhat positive. You know, typically this ends fairly bullishly, but there's certainly a possibility that we haven't really made our bottom yet. And we've talked about that before. So it's not a big stretch to say like, well, who's to say we need to go up to these particular targets right now if there's not enough buyers? And the answer is that nobody, you know, could say that that's not the case. So if there's not enough buying pressure here and we're not pushing, then I'm definitely looking at this uptrend as if it's like a LSPY kind of thing, except for the fact that this bottom is so heavy volume. So what I'm expecting here is this is kind of an auto reaction. I think we're going to get like a phase B top, and then I think we're probably going to come back down. So I'm changing my expectations a bit because in the event of a squeeze, this is just an opinion. You don't have to agree with me. But that particular markup we made in the very beginning would have panned out, I think, because you would have gone more parabolic. We've passed by every possible pivot point, and we just really haven't turned. So we've been really just chopping. Volumes drop back down to a bit more average. I'm on the 1 hour right now. You can see it never even got overbought. So looking at it from this vantage point and then thinking about the fact that we just made like a death cross yesterday, which typically denotes up to 20% more, quite a bit of downside. I mean, it could be quite a bit. That 450 doesn't seem way out there to me. It certainly seems like a possibility. And in the grand scheme of things, I don't think it makes a lot of sense necessarily for this, maybe this widening that was occurring, unless you think it's going to go all the way back down to the bottom of the widening. But that may be the case, is that we're kind of eking out to the side here, and then we're going to drop down to this bottom over here somewhere, and probably before May. And certainly that's a possibility. So a lot of people I called out 450. So my thought is there's probably a lot of bears who are looking for 450 and who are just waiting, to get this party started again. So that is another substantial leg down, if it were to go all the way down there. I don't know if that's necessarily going to happen, because my thought is that if the market can somehow stabilize a little bit, we may avoid what we would call a just kind of a continuation on this downtrend. We may actually build out a proper range. So when I look at this, there was an initial buy up that we looked at as a possibility, and we had a lot of interesting points of interest. Obviously it followed it in the beginning. There's nothing that'll change my mind about that. It was clearly and evidently hitting that marker, and then it rejected off of it. And again, what I say could have happened, I don't want to say should have happened, but what could have happened is that breakout here led to a jump over this creek, which it did finally, but it did it like days later, right? Like 3 days later. And during that time period, there was just a really slow churning buy up. It didn't really feel awesome to me. I think there was bits and pieces here, like the bottoms are relatively high volume, the tops are kind of meh. So, it's not like horrible selling on the tops, which is good. So certainly, like right now, if you're able to see it on my chart, and I'm using a lot of different things because I was looking at the widening, trying to map it correctly, and I think I got it now. Like certainly this localized creek has been jumped. And so you can see right here, it's above this marker. This is the S&P 500. So pretty decent barometer, I think, for what we might expect. So it's above it. Could it be distributing, in order to sell back down through it? Sure, but we're not there yet. I have 531 on my chart. In theory, if it chopped down, it could go all the way down to 526. But it'd have to be before by Thursday. It wouldn't be appropriate to do it like way before then. So yeah, in theory, like looking at this right now, does it look like it could be getting ready for a breakout? Like a kind of quasi V-shaped almost cup and handle, sure. And a cup and handle would be this peak to this peak. This did make a lower peak, which is actually a good thing. It didn't come up above that top. However, both of them came above, both the top on the 9th and the top yesterday on the 14th, came above the previous prelim support, which when we were dropping down was at 539.59. So in theory, this is kind of the wall we need to really breach, and we haven't quite gotten there yet. So yes, we jumped the creek, but we still haven't gotten over that particular ceiling, that wall. The original uptrend is lost. You can see that the steepest possible uptrend here, which is the one we had hypothesized, if this went parabolic, that's where it would have gone, potentially very, very high up to 584. And I personally still think that that's the target in mind. I haven't changed that. But one thing that does often change is that sometimes if that pivot is not met immediately, that becomes a kind of center mark. And so it's important to note that, like, if that's the case, a center mark here, that breakdown, I would probably go back to March 25th. And like, if that's a pivot, then this doesn't get up back to the top till like May 1st, which means there's a lot of time in between now and then to potentially form like a real bottom, like one that has some teeth to it. And one of the things I'm thinking about is a auto reaction here, and then like a phase B top potentially. Maybe only comes up to 550, you know, because again, there's this widening. If you break that too soon, it's a very bullish signal. There's also an hourly EMA right above at 548. There's a huge amount of intersection right there at like 550. So this is going to be a problem zone for us, and I don't know if it's going to break it based on the current setup. I'm not saying it's not possible. I'm just kind of like, you know, this doesn't really look like as strong as it did when we took off, and the short covering kind of got a free out back here when they brought it back down. And the amount of time we've spent in this region really, to me, is like, okay. I mean, at this point, is it still squeezing? Maybe a little bit, but it's probably not at this point in the predominantly in the hands of short sellers. Although I think that, again, if I'm somebody that wants to get back out of a position, I want to get back to April 2nd. This is the same as like when we look at a short squeeze and we say, hey, they want to go to here, and then it reverses before you get there, kind of thing. I think that when you look at the overall big picture, it would make some sense to some degree to get another pop before any kind of a drop. But in looking at this kind of setup the way that it is, it's a very difficult one, I think, to judge as a hyper bullish setup anymore. It's just not. So that first trend, I was trying to get to that point, and I kind of like got sidetracked in my brain. But this first trend is lost, so it's gone. So it just broke on end of day yesterday, basically second half of the day. It kind of broke down and came through here. So at this point, could it hook on that trend? Sure. Where would that be? Again, 550, you know. It would not surprise me if it stopped short and just didn't go there. It didn't break out of that kind of dominant creek down. And I think that, again, that widening, if that were to break, would be pretty substantial. I do think, based on what we saw, this makes sense. Because if this is a reaction that's going to lead you to breaking this wedge, this widening megaphone, rather, it's like a broadening wedge, because technically it's still a wedge at the top, or whatever. I get where I'm saying that backwards. If this is indeed what it looks like, then the target would be where that began. And that began way back up here near 600. So it is actually a very sensible move. It may seem a bit out there, but it actually makes a lot of sense as to why this particular target came up on a triangulation, like right off the bat. Okay. I'm like, okay, I get it, you know, because that would be a breakout target that bulls would be targeting if you were to break this gigantic wedge. It ultimately would be targeting 600 or thereabouts. I don't know, again, how necessary that really is. Given all the information that we do have, it kind of makes me think that it may not be entirely necessary to go all that distance. And we've kind of touched on this. I don't want to get like kind of stuck going backwards here, but certainly like there's a lot of possibilities if you were to break back up, but you got to look at the big picture, and this is a huge trend. This goes back to April 2024 to August 2024. So breaking back above that, yeah, I mean, could it do that and then still come down? Yeah, maybe. But I mean, when you look at that in combination with this widening, it certainly seems like that would have to be like one big, huge kind of news move or something like that. It doesn't seem very likely that that would just happen right now, just because of buying pressure. The news flip-flopped pretty fast. It went from really, really positive to right back to being negative. Most people are urging people to sell pops, and I don't think that's necessarily bad advice. I mean, most of the time I'm like, yeah, I wouldn't trust the news, you know, as far as they could throw me, kind of thing, because they're probably, again, playing more to the hands of the big money. But in this case, I'm like, meh, it's probably not the worst advice, because in the end, having a cash position doesn't hurt you. And it probably would be good to have heavier cash position in times of uncertainty where you could be chopping. So what does a phase B top look like here? Well, if this is like an auto reaction, so this is a buy-in right here, there's not a lower low, which is good. And then there's an auto reaction that tends to go back up to the previous bottom. And that close enough kind of did, but not quite, almost. A phase B top would then be like a backup that breaks down that trend. It did. It's exactly what happened right here. This is the trend going up. It broke it. Once you break down that trend, then, and I'm going to kind of start cleaning this up a bit more. Once you break that trend, then you can go into like a phase B top is what it's called. And a phase B top is usually like a secondary pump that is not quite as strong as the first. It could be a little long-winded. If you've ever seen a Wyckoff schematic, you'll have like preliminary support or whatever, and then you're going to get a auto reaction. Usually the auto reaction comes back up to the prelim, and this one came up to one of them, but I didn't draw it up here. So anyways, you'd have an auto reaction, and then you'd have like a phase B top, usually after like a small period of time. This looks like an M cross because it is. Then you'd end up with a secondary motion up. You'd have a phase B bottom is what it's called. Phase B bottom can be above or below the previous bottom, but you'd have like a phase B bottom, and then it would create a new creek that's a bit wider. This is like the main one that you're going to use, and then that's pretty much all there is to it. Then you have a spring potentially. You either have an LPS here or a spring. If it crosses the creek early, then it's usually considered the LPS, and it just goes up into an SOS and then takes off. If it does not, then you get a spring, and you'll have a retest of the floor, the phase B floor. Usually you're going to test every single one of those levels on the way out. So you'd have like a big push, and then you come back down on top of the creek, and you test that level, and then so on and so forth. That's basically it. So this particular bottom may not be in yet. This one may be in already as one of these two bottoms, like these selling climax bottoms at 481. Certainly seems like that's a possibility to me. Like that may end up being like a floor that we revisit. Does not seem that out there to me. So when we first started looking at this, I wouldn't say assumption, but my first inclination was that this was going to be like a squeeze event. And it kind of was. I mean, it was. If you look at the statistics of it, it's definitely a squeeze event. But is it ultimately going to continue to these higher pushes that I originally expected? I'm not so sure. I think those might be longer term bullish targets that are not necessarily going to be met right now, especially if the news turns sour, which apparently has been happening, the drop of a dime. It's kind of like, yeah, it could happen, but somebody could tweet or you know what I mean, and then dump the market. And the market's been at the whims of the president's decisions with these tariffs lately. So whether or not there's consistency, I think it's unwise to try to be overly predictive right now and say like, oh, this is definitely going to happen, when I'm like, I think that the squeeze event was this motion here. I think this, to me, could be an attempted second top, but I'm not super convinced it's going to actually like hold on and go. So what would holding on and going look like? It's kind of a two-leg process here, a two-step process. I've got one idea that I've already illustrated below, which is we may actually advance this widening a bit early and then kind of slide back down in order to get to the trend again, like the older trend, like the very beginning of this. This is not one that we've revisited at all, and I've got it drawn fairly bullishly. I probably did it on a different time frame because this usually is the reason why these wicks don't match, but yeah, I'm not sure why that looks wonky, but it does. That looks way different. I hate that. Sorry, guys. Yeah, I think I did it on the 4 hour because this looks correct on the 4 hour. Yep, looks fine here. I don't know why on the hourly it looks so janky. We'll just keep it on the 4 hour for now. It looks really wrong on the 4 hour, or on the 1 hour. It looks completely different. But this is basically the 4 hour, potential 4 hour trend. So in a situation where this were to keep going, I think you would expect there to be maybe a push against this resistance and then a backup and then a push again. And that's where I think maybe we can find ourselves up in like the 580s. In the event that this is more of like a phase B top, I do think you get kind of a pop here, but it probably stops short of really breaking out. It might advance the creek, it might not, but it would basically be 555 most likely. And then you would drop back through, and that may even be too high. Yeah, I don't know. Typically don't want to like go way far into the next range. So 550, somewhere over the previous top would be ideal. But there's a lot of trends that are quite high, so I'm not sure. I mean, I don't know. Somewhere between 550, 555. And then this would break down. So you would come down and you probably hold this for like a minute. And then you'd end up kind of going sideways and then eventually like breaking down this direction. And so this particular setup would be the beginnings of like a major range. It's a great time potentially to trade if you know how to trade it, because you're going to be trading like tops to bottoms, which is, again, pretty easy overall. I mean, sometimes that's a much easier way to trade than what we're doing right now, which is, you know, you've got these big swings, but they're not really producing anything in the options chain. And there's a lot of other little issues. But this is something that I could definitely see, happening. So I wouldn't presume to understand fully exactly how long all this takes. But like I said, this could be thought of as like a pivot potentially, these middle points that we saw. So that could be like a halfway point. So I would assume, and it is an assumption, that this would be somewhere around the first week of May, potentially like breaking back out again. So does that make sense? I think it does. So the range is basically just here, and you would come back down, you create some kind of a phase B bottom. Could be higher, could be lower. Don't really know what the sentiment will be at that time if it does that. But then you're going to have like another rally. This one probably would not look as major. And it actually might go a lot faster than that. And then some kind of a massive like dump. And then you have a real like buy-in, kind of SOS moment here, something like that, going into May 12th or something. Okay. Market wide, would this make sense? Sure. You know, to save an SOS for later, and maybe even an SOS with a backup going into, you know, that week of May 16th would make perfect sense to me. And then you kind of take off to the upside after that. And that's where you finally come back up and retest like 582 and then maybe work your way back out and up and over. And it could take quite a while. I mean, at that point, if we're really just looking at a summer move, this would be an adequate bottom right here. And you would have potential for a lot of things, but probably end up with some pretty steep backups and then heading on up towards, 600 or something like that. And I don't think at that point I would be very bullish, but we'd have to get there, you know. And on some degree, you might look at this and say, well, hasn't that already happened? I mean, we had this kind of bounce in, and then why we got to do it again? Well, you don't. But the thing is like these V-shaped bottoms kind of spoil the market, and we get used to seeing them a certain way, but they're not always like that. And we have to kind of take into consideration that we've had a lot of different types of backups in the past, and some of them have been quite long-winded. This is an example of one that has a pretty decent pushback up, and then it still comes down and makes a new low. I mean, this is a huge rally, and this is again, one of those examples that may not be a bad one to look at. This was also a sort of widening, and then it had this really extreme low, this massive sell down that happened in 2022 going into 2023. And when you look at this big motion here in 2022 going down, this pumped back up really far, right? And it does go considerably back. I mean, if you look at the range, it was all the way back up to the range bottom. And that makes sense. And you're like, okay, well, that was great. Maybe we're going to just turn around, right? And I'm sure at the time, it would have been easy to look at this and say, well, we could just kind of go up. Sure, that would be a big V-shaped recovery. Does that happen in the S&P 500? Yeah, I mean, look, every other bottom here is pretty much that big V shape. It doesn't really make the second bottom, after that bounce out. So it certainly is not like a way out there kind of thing. So if there's somebody out there who's like, I think it's going to be a V-shaped recovery and just keep going, I mean, it's not unheard of. There's clearly a lot of those in the market. COVID is an example of one. It never made a second low, really. It's just this massive sell down, bounces out, and then goes. I would argue, of course, that COVID was a bit different. It was, random and not expected. And this is something that was done with deliberate intention in terms of people making policies and stuff like that. It's not like this was like, oh, this accidentally happened. Like this was actively put into play by people who had time to think about it. So there's an issue of like pricing it in correctly. Whereas COVID, it's like a reaction and then kind of, okay, are we all right? And then we are all right, let's go back. As opposed to like pricing in like a bigger sell down. So it wouldn't surprise me if we had an even longer winded bottom here for sure. But all that being said, the widening is considerably tighter than the one from 2022. So even in the midst of like, oh, this takes forever to get out of here. Yeah, sure. I mean, if it dropped again and went to like 450, which is certainly a possibility. And if it dropped all the way down to 450, then you could have, several months, pretty much the whole summer down here. But that's not even remotely, and if you look at the grand scheme of things, it's not even nearly as long as this was. So I don't see it as a very strong likelihood that you're going to spend a year plus in like a low. In fact, I would not be surprised at all if the S&P 500 ended up green this year, and I've said that before, if it actually has a big rally and ends up green before having a really bad slump year. And that's based on a lot of things that I don't really want to get into right this second, but there's a great deal of information here that we could take. And we've done that on IWM already, so we won't do it on SPY right now. But yeah, I think today you got some kind of modest upside for some of these. There's not much to talk about. Yesterday it was kind of flat yesterday. It went down, came back up. Pretty simple day. I was doing my Kung Fu stuff yesterday, so I was not around the computer most of the day. I will say that, again, this hasn't really been a great time for options traders, in my opinion. I think it's been pretty terrible, to be honest. I had unbelievable call out here and made basically no money on it. I mean, being genuine. And in the grand scheme of things, it's like, did I just not know how to capitalize on it? Or was it just not the right time for that kind of a play? I think I would have done far better to some degree had I bought in and just sold off on the very first pump, right? Like immediately without any expectations going further. And I did. Sold about half my position here for about 100%. But 100% on a 10% move on the S&P 500 is like ridiculous. Like that's really low. You can make 100% trading like far less of a move in normal market circumstances. So I was like, well, that's kind of crazy, And And then ever since then, all this upside has been downside, which tells me that there's been so much selling and selling pressure that it's driving down your bid and ask. And that's bad. You know, when you're going up and the price is dropping, volatility maybe coming down a bit, but at the end of the day, like, it's not really a great environment to trade upside, is it? It's just not. So there's very little to be had here, even if it does pop. This looks like a weakness to some degree. I think it's just struggling to kind of get to that phase B top. And I'm wondering if we're even going to get it at this point. But yeah, just not my favorite trading environment. I think I would have much rather enjoyed maybe shares only. I don't really love leveraged ETFs, but in this case, it might have been really beneficial. I know a lot of people are going to those 0-day trades. I'm not a huge fan of those. I mean, you can make money on them, but it seems like that might be the only way to make anything right now. So I wouldn't blame you if you're doing it. I'm just saying. So in the event of the market kind of having like a second dump here right now, as opposed to going up, I didn't really talk about that. I was looking at this morning, where would I go if I was thinking about like, where would I go if this happened? And I noted yesterday that when we came down, this didn't actually make a lower low, which is kind of interesting because if it were going to drop and like go to a new low here, usually you would have a sign of weakness, but there isn't one. Now that doesn't mean it can't break down. That's a silly thing to say. Obviously it could break down, but you'd kind of have to wait and see. There's not an early signal that this is going to flip bearish. Had this dropped down and come below 533.75, that's not the right number. Why is that on the number? Again, it's probably just like what I made the chart on, but yeah, I bet it was there. That was where I put the floor. So if this had come below there, I would have been like much more concerned, but it didn't. So instead, we're kind of looking at this like as an uptrend to some degree till it isn't, right? So there's certainly a possibility here. We've gotten a push high. We're kind of dropping lower lows now. These could be considered a little bit of an SOW. See how it's coming down after making new highs, it's dropping to new lows. So it's selling off. It doesn't look like there's a lot of momentum. There is a bit of a widening, so there is a possibility of a widening top. It's not the most common thing that you see, but it's certainly a possibility. Given where we are, I think it's just heavy selling, trying to like turn it back down. And if the bears are successful in doing that, it's just a distribution. It's really straightforward, and it won't obviously go up, but we still haven't kind of breached that zone that we're trying to get through here. And I think that's fairly obvious. At this point, it even looks like the ceiling rather, shouldn't say the wall. The ceiling has been dropped to 541.5. There's frequent closes beneath that marker. So it's a pretty considerable. In fact, actually, I might just move one that I already have because this one's really low. No, I know why I kept that one. I'm going to leave it there. Yeah, I'll put an alert above there because if it breaks above that and can hold it, I think it'd be in a potentially bullish spot to go. If it cannot, that's an interesting spot for me, so I'm going to keep it on the chart. Yeah. So in the event this comes back down, the creek that was drawn from the previous peak is always the one I use first. It's like the local one. That would be the pitch down. That would take you back down to this 530 area, which makes sense. Again, that's where those two bottoms are previous. That's about as low as I'd say it needs to go if it does come back down again, at least locally, because looking at this big picture, it's like, yeah, it jumped that creek. I mean, certainly you could come back down on top of it, but there's not really any reason to go below there unless you're just straight up bearish. You can work out to the side and come and get to this guy if you want to, which is the wider trend up, but you could do that sideways. You don't have to do it, straight down. And at this point, breaking straight back down through this creek would absolutely signal a greater distribution. In my mind, it's like that would be a pretty bearish looking chart. To drop back beneath 530, I'd have to just completely exit, wait, see if there's a new bottom. And it could be local, like at 520, or it could be really far down. You could be coming all the way back down to near 500 again, so, or below. So I mean, it's not like a little move there if this starts breaking down. I'm inclined to think it's going to go for the 550 push still, so I'm not going to put that out of the equation. But anyways, that's pretty much it. There's not much else to talk about here. I would be genuinely thrilled and surprised to some degree if it did break to 564 at this point. It's not that it's not possible. It's definitely a possibility. In fact, there were some pretty decent triangulations that were going into those areas. But again, every time we've kind of pumped up, we just sort of failed and we left off to the side. And I was curious about this. It looks very similar to the first push. There's a M cross with a push up, and we have a similar situation now with this M cross. We're kind of waiting to see if we get that push up. But in the meantime, it like abandoned that early trajectory and drove low. And it did the same thing here. And it did close on Friday pretty much right where I thought it would. I think I said it was going to come back to about 530. It closed like $1 or $2 higher, but it basically sat on that end of day. So there wasn't much surprise there. This particular pump on Monday was kind of a nothing pump. Didn't ultimately yield a higher push. It ultimately didn't really have an SOW. It's very much like a sideways action, just consolidating along that previous support, which we're trying to see if we're going to hold it as a support or treat it as a resistance, right? So what is that number exactly? It's 539.59. So if you don't know what that number is, it's just the bottom from over here on April 3rd. Very straightforward. So if it were to go up, I would expect it to hold that line, hold that support, and then push up here and do a little bit of an SOS, probably around 545. And then I think you're in for about a $5 move. You may get a $10 move if you're fortunate. It's a big move, but it's not like 10% big, right? Like this is ultimately like a 2.5% move, which is much more reasonable for the S&P. I mean, on the whole, those are more commonly the green days as opposed to like a 10%, which is pretty huge. On the off chance that it goes all the way up to the top of the channel, we're talking about maybe about a 5% move, about double that. Yeah, I don't know, man. AMC, I went and looked at AMC on yesterday, and I just really didn't, to be honest, I kind of just glanced at it and was like, all right, and then just moved on. I think I made like one comment on the AMC channel in our Discord. I was like, yeah, I was waiting for that drop. It just never happened. So on Thursday, Friday, I was like, well, I don't know why we wouldn't just break down here. This was like a rising wedge, so to speak. And I was kind of concerned as to why. And you never know today, guys. We may find something that really helps to solidify a more bullish setup here. But I was really not looking for anything particularly bullish or bearish on AMC regardless, because I was thinking that what would happen is like by Monday, we'd probably drop down to this 280s level. We didn't go that low, so there is that. But it is now trying to break through the next trend, and it's having success. Does that mean it's going to definitely break down? No, it's just noteworthy. Like there's not really that much volume here outside of like some random buy-ins. The volume's like evaporated. We've been going long periods of time with like nothing, and then you'll just have like a sudden buy-in or a sudden sell-off. Liquidity seems to be a bit dry here, which again kind of goes to the point of like, why are we here? Like I was saying this before, is like, I mean, there's volume here. Don't get me wrong. If we look at a bigger picture, there's probably a decent chunk of volume right here. But like I was saying it before, like there's just not. I don't know why you're here. Like we would hit this low, and if you don't have any more volume, you're gonna take it back up if you want to go down, right? And you're gonna take it down if you want to go up. It's that simple. You guys are like, well, I don't get it. That's so backwards. Why can't you just go up if you want to go up? Is a liquidity problem. If you just wanted to go up right here, good luck. You know, the volume's not enough to push you up. See, the reason you go for the spring is usually because your liquidity is evaporated and you're doing like a final shakeout, and then you just buy through the range. You don't stop and check every area anymore. That's why at the end of a really good range you have just a buy up period. You know, it's that simple. There's not like a lot more sideways, you know, action. It's just a really fast, like, let's get back to the top of the range and leave because this area is done and we don't want to go down anymore. So it's like a final liquidity grab, final shakeout, so on and so forth. But anywho, I thought by Friday we might actually get that drop. I was like really like looking for something down to come down to this trend, and that was the big picture here. It wasn't really that, oh, we have to go down to this level. It was more so, if I recall right, I was thinking about this trend. And so at this point, it's like, all right, so let's talk about like what's going on here, big picture. Are we really like in a bad spot, or what are we doing here? I don't think we're in a bad spot. I don't think we're in like a great spot. I think we're in a decent spot that looks like it's had a push up, had a secondary push up with an M top that I expected. To me, could read this as like a phase B top. I said before, I thought it might be a little bit behind the market because during this time period, the market has been going upward and like kind of generating what appears to be like a second leg up, potentially. But AMC sort of stayed in the lower range. It's hard to do this comparison because I'm looking backwards at like April 4th. It's not that long ago. But during that time period, that was the big buy-in, remember, on the 7th? And AMC just never left that area. That was the buy-in, and then here we are. We're still there. So if you look at the two, I'm not saying it's like way behind or it's going to be like exactly the same and have this massive push. It just feels like it just wasn't there. And I think that AMC definitely needs something, you know. Is this enough to kind of get it going? It could be. We've approached this top. We're testing it. We sold back down. That could be an SOS with a backup. Could also be a phase B top. Auto reaction with a phase B top. It's a weird looking phase B top if it is one. But again, here's where we have some differences between the two charts, like the major market on the whole versus like AMC. Is that AMC, once again, it's kind of like it already came back to its previous bottom. If you look at February 3rd, that bottom is right there at like 295. It absolutely already hit that. So there's nothing else there. Does that make sense? Like that's the floor. So one of the things that this might give you evidence that this would be a very big bullish move if it happens is that breaking back above here and that parallel, which is a considerably important parallel coming down, that zone is right around $3, which is a really common buy-in number, right? That is the place we were consolidating, so it's a high liquidity zone. So it's like that'd be a great place to stop if you're just going to have a quick move up and then come back down. But if you were to hold that, if you were to break out and hold that, so if you pumped up here and you didn't hold it, obviously that could be kind of bad. You know, you just send yourself back south. But if you came up here and held it, like I don't see where you would go next except really high. Yeah, there's a level here at like 320. And I said before, like I thought 320 might be a localized target. It seemed like a really common one that kept coming up. Still think it's really important. But it's weird to me to look at this and think like, well, where else does it go? And I'm like, there's not really many places it goes from here except pretty far, because the previous range, which has been heavily traversed, goes from 3 up to 370. So I'm like, yeah, there's not much else there. I mean, you can go back to the 335, but you're basically looking at just splitting the difference between the two, and then that's that. So the next range, again, from here to here, it's pretty straightforward. And I don't see that as a very complicated setup at all. The only thing that complicates it, there's a cross trend that's coming up from March 14th. I don't ignore these because a lot of times these do signify where you hit, and then there's a massive macro parallel coming down from the overall structure here that I'm using. And so I'm like, that's probably the distribution zone. But that's it. I mean, there would be like a pretty huge push right through there, potentially all the way back up to like 360s area, and then maybe extending up to near 4. And I've said this before. I mean, I had it on the chart. So I don't see this as any different than it was before. It still, to me, looks much the same. Yeah, Booksy, but what if the market has this like downturn here? And you said before that, and this is a good point, I'm just arguing with myself. You said before, Booksy, that if the market goes up, sometimes AMC might go back down, so on and so forth. So why would this happen in the broader market and also happen on AMC? Doesn't it seem like, that's too similar, like they're too much of the same thing? Well, again, I think you have to look at the big picture and say, like, where are we, right? In the system of everything. COVID was where AMC went for that second spring, but the setup that led to the drop for AMC was downward, right? It was mostly downward. The setup that led to the drop for the S&P 500, of course, was more or less upward and sideways. I think you have a similar case here. And that's why originally I was like, well, maybe they're going to be, again, doing kind of a repeat. That was, of course, before all this tariff stuff happened. And now all this tariff stuff happened, I'm kind of like, meh, I have no idea. It's very possible that SPY needs to have like a spring. And that before I would have said, no, I think a V-shaped recovery if you have some kind of major drop. But the way in which this is developed certainly makes it seem like the market is not comfortable buying in yet and would be waiting for some pretty good opportunities in the future, which could be quite long-winded, And so we look at this big picture. It's hard for me to look at this and say, oh yeah, it's going to be completely different on AMC. AMC is going to go for a spring. The rest of the market's just going to rally. And I'm like, well, I think that kind of depends on news. So, and you guys already know what news would bring about that rally. I don't need to tell you that. Everybody if you're paying attention, everybody already knows. The news will be China. It's not going to be just one or two tariff exemptions. It's not going to be one or two deals brokered. It's going to be the China deal being met. And I think there's I can't think of another great catalyst. Rate cuts is a big deal, but there's already expected rate cuts. So it'd have to be some kind of a surprise there. There's like nothing else that I can think of. So if there's no news on China and it just is a prolonged trading conflict, I don't see why we wouldn't come back down. Does that make sense? It doesn't even make sense to me why we wouldn't come back down. Again, in that kind of original thought process that we had, in my mind, I was like, well, SPY might go ahead and break out and start heading back up towards its all-time highs. That's like the COVID setup, though, right? And in the COVID setup, we've already talked about this a little bit, but that COVID setup, it did do that. It has the V-shaped recovery, and then after the V-shaped recovery, it just kind of goes straight back up. And there's no length of time spent down bottom trading. And this is where, again, we've kind of been through this over and over again, but it's good to just remember this. Right here, this is where AMC really has a downturn, like a serious downturn, right in this area. It's right after September. AMC goes to new lows, right? SPY doesn't go back down. The S&P 500, that's the majority of your large cap stocks right there, the biggest 500, right? So you're looking at those like they didn't go back down for spring. They do have some trepidation here going into the election cycle, but ultimately, like, they don't go down for a spring, and AMC did. So could something like that happen, Booksy? I don't know. I mean, maybe. I don't think it would be necessarily 1-to-1. So I don't necessarily think you'd be up at 600 and then AMC goes for a spring. Maybe in this situation, it's this off chance that we do break out here. That could be it, that this is where the market kind of breaks out in April and it stays up high and elevated or something like that. And we don't get a second bottom, which again seems kind of unreasonable to me right now. It's hard for me to imagine that happening, but sure. If something like that happened, would that setup then be kind of a 1-to-1 with COVID? Yeah. But it's like, I cannot imagine why this would happen unless there's good news about China. So couldn't the technicals see that before it happens? Maybe, but it would be one of those things where it's still hey, this could happen, but we can't guarantee it, and then we'd have to wait and see. So it really doesn't make any difference. It was like what happened back here. I was like, this is there. I don't know if it's going to happen, but it's a big move if it happens. And then it happens, and you're like, great. But it happens ultimately with correlation with some news that needs to be there at that time. Buybacks from the Treasury, yeah. I mean, there's a number of things that could spurn, I guess what I'm saying, is like a rally. But even coming back up to 580s, I don't necessarily think that's a huge breakout. I still think that's a bit in the middle. I'm just trying to imagine like what it would look like if this happened to break out and up and form out into, I guess it would be something like this, just to keep it simple, like an S-curve, form out into May, and AMC goes down for a spring or whatever during that time. So right here, there's like a buy up. AMC maybe into late April or May gets this really nice buy up, and then the S&P 500, kind of like what we see in COVID. Yeah, it does have a chop period, but then ultimately like breaks out and goes back to its all-time highs, maybe even beyond it, depending on how that works out for it. And I'm not going to measure it right now, but then during this time period, this is a similar setup where like this is just broken out, it's heading back out. But this is where maybe AMC takes that nosedive and goes back for liquidity, finishes what it was already doing for the last year, and then it's over, right? It's a possibility. This is very theoretical, in my mind. I haven't even gotten to the point where I'm really wanting to measure something like this yet either. But I do think that, sure, like if there was some kind of good news and it was China related, you'd get a push here. It would have to come above this previous top at 576. So again, 583 is a good contender. Then you'd come back down. You'd have to retest 550, which I have as a retest. And then you basically just go into like a reaccumulation phase pretty quickly. You break out and you go. And that's it. And the acceleration of that on the first leg is roughly equal to the acceleration on the second leg. And this guy, weirdly enough, probably becomes the S-curve middle. It's like usually that initial trend. That still could amount to us having like an early pump here that needs to have a buyback in going into April. So again, it's still not like straight up. It's like a build out for a potential bull run here. And remember, every M cross has the potential to also cross down and fail. So you might see these as like polar opposites, and a lot of people do, because they'll look at this and say, well, that's completely different than this other thing. And that's not helpful at all. Well, it isn't. On the one hand, a jump above certainly looks different, it looks more like an S curve, and that's what we're seeing here. It's like a 1, 2, and then a 3, 4, and you're gone. And the 3, 4 happen as a breakout, across. Absolutely. I could see why people would look at that and say, there's nothing like what you said before, but I don't see it as that different, because honestly, if there's an auto reaction, you end up with a auto reaction and then the top, but when you come back down, this again doesn't ever cross up and over. So there's a failure to jump the creek. And every time you generate an M, you have the potential that this could at some point jump over, and keep going. But usually what we see is that in a distribution cycle, when that doesn't happen, is that the 3, 4 end up being like hooks, and they don't actually ever break out. So you get like a 3, 4 in a corner or something, and then there's like a drop. And so you wouldn't look at that and say, oh, it's the same thing, or it's completely different, or whatever. I do, though, think that they're different. I don't necessarily think that they're exactly the same, but I also think they're not they're not polar opposites like a lot of people think they are, because both of them could be bullish. It's just a matter of like whether or not it jumped early versus, oh, well, it's not doing too hot. It needs to go down for like a spring, and then, it can then jump later. And it's pretty much the exact same outcome regardless, which is what happened on AMC, right? Because it does not go up. It goes down for the spring action. It takes a longer time to get there, much longer time to get there. But ultimately, once it breaks out, what happens to it? You already know the answer. It just kind of melts up and like catches back up to itself. And it really is like a pretty much a one-to-one comparison with what happened in both March and also in the COVID bottom. I get that. But that model right here is just a Wyckoff bottom. And this is just a V-shaped reaction, like an S-curve. So the good news, if you want to say that, it's good news, is that we're at a point right now where I think we're pretty much ready to make that decision. One way or another, it's probably going to happen within the next 10 trading days. It seems pretty unlikely that we would go beyond there based on the trend, this outermost trend. There's no other space. So by April 23rd, I think you're going to have the answer. And that's good. I mean, you're at a point where you could be seeing like a continuation of like a major S-curve, or you could be seeing, all right, we're going to head back down to the lows. And each of those is good targets to pick out. Does that make sense? So I'm looking at this. I don't see a huge disconnect between the idea that maybe the S&P 500 does have a push here. Maybe it advances the creek. That doesn't mean much to me on just a one single push. 550, 565. There could be a slight difference in terms of heights, but at the same time, the only difference that 565 would make to me is that it pushed resistance. It could indicate a number of things because of that push of resistance, just depending on the volume and what happens right after that. Could be a push of resistance that's ultimately pushing a creek in order to advance and just needs to back up and then advance, or it could be distribution. But both of those would make sense, right? If we're in a situation, you guys are like, well, those are opposites. Again, it's progressive, TA doesn't give you the answer way ahead of time all the time. Sometimes it's like right before, or sometimes it's a little bit lagging. You're kind of looking at something like interpreting it in the moment, and you may even be a little late interpreting it. But there's this sense of like, this would probably push resistance, retreat, and then jump. That's normal. This would probably push resistance, retreat, and then fail to jump. And they're very similar. One is like distributive action. The other is not. There's more nuance to it, and folks that do Wyckoff will tell you like what they think is more likely based on what happens. I think the idea is if it advances too quickly with heavy volume, it's usually distributive, because distribution typically has extreme swings with heavy volume. And it usually goes too far too fast. But I don't see either of those as not sensible, with SPY, with AMC. Like any push here, we don't know because AMC is not connected to the S&P 500 directly. It's indirectly, because of the relationship with the market. But a push here, to me, would be like, again, you're looking at the hourly, it didn't even get overbought on AMC. A push here, to me, could be pretty substantial. You look back at the buy-in that happened off of the 50% RSI on 1 hour back on the 10th. That move right here on the 10th, after it kind of found support, it was at 52 on RSI. It ends up going all the way up to 20% move while being kind of overbought. So it would not be surprising to me if you got something similar here, and this is like a 1-2, and then you're going to get a 3-4, which I already see that as a 1-2 to some degree. And then the 3-4 could just be like a top, right? So 20%, not a huge move, but it does get you to 350. So I think that would be good. But I'm thinking that could be in correlation with like a smaller S&P 500 move, for example. And if I recall, IWM made a very similar move to AMC. It actually looks pretty whack. This came down low. And I largely abandoned this chart back here, so I haven't updated it. It never broke out, obviously. Went back down. I kept the lines, which probably followed through okay. The lower ones. Yeah, they followed through. But I actually kind of haven't looked at it. I said this was probably a bigger picture SOW right here. Heavy volume, but this is similar to AMC. It doesn't have the same kind of advancement properties that the S&P 500 has. In fact, let me see if this actually made a lower low. It doesn't look like it did. It did it in extended trading hours. This is a low of 171.73. This is a low of 171.74. Wow. So there was a penny difference. That's very, very close. So close to a double bottom. That's crazy. It kind of makes me wonder if that's already like a phase B top. I don't know. Never heard of an auto reaction phase B bottom being that close, or that pullback, second pullback being that close. It could be that that's already a phase B top. I mean, technically it didn't come back down below the bottom, so it was an uptrend by like 1 penny. So I guess if this broke down, that's what it looked like. But this hasn't even come up to the widening yet. This isn't even close. Yeah, small caps kind of look like they'll have a bigger leg on this one. It's like inverted because large caps already went there. Like they already got up to you can see they already went up to like near the top. Small caps are not even close. They're way off. So I'm going to venture a guess here, and I'm going to think that I think small caps are going to have a bigger leg here. They're only about halfway up. the channel. So more volatility, not necessarily a different target. They just never made it. They never made it up there. This target right here. So 200. All right, hang on just a minute. I'm gonna take a quick break. Hey, I'm back. No, I didn't mean to leave for that long, but I did. So, oh well. Uh, yeah, I'm not particularly looking at that right now. I think we're gonna just watch and see if it can make this creek jump. If it does, and it's kind of trying to, we might get that leg up. I'm looking at a gap fill right now of like 272. That would put it right in that zone. So never filled that gap. There's also a gap up here at like 281. This one's a little different than some of the others. Maybe the idea of this widening down seems to be much the same going back to March 27th. But I believe that the larger ETFs, their widening is like twofold. They have like a much larger big picture widening that's clearly been going on, and then there's maybe more short term. So for example, IWM has one that goes back to about the same time on the 24th, and that overhead looks pretty close. That would be up here around 194. The potential for a 194 pump does seem likely. So what are we actually saying here in conclusion? No, I think there's a decent chance that what we're experiencing is a pretty important, maybe formative wave cross where we're going to see some reaction on the other side of it. But I don't know if it's going to be as maybe one up as expected. So when I was talking about it previously, I sort of had to, well, maybe not right off the bat, like pretty close to the early day, like right maybe the day or so after, we were talking about the pumps, and I was saying like a lot of times you get these kind of sideways pumps that do this kind of business when it's still a bit distributive, but you want to go up. You get these kind of squeeze moments with buyback in. That's often the case on the right side of a wave. So like this is like the down, and then that's the right side. So if you're looking at a wave, what I'm talking about is like this. So if the wave comes down, now naturally this wave would continue right somewhere, but that the right side would be like this side here. And this is pretty common if the right side is not going to ultimately break out right away. So sometimes what happens is that the right side is either a shrinking iteration. So this is like narrowing, for example. So this is a right side that's not going to go over the top, or it just has to make that final pull down, and it just hasn't done that yet, which is like the creek check, right? So the other side of this. And so you're trying to advance, but you're ultimately not going to advance right away. And so there's a typical model of that. I guess I would call it like almost like a rising accumulation that sort of more blatantly looks like a distribution, because it's ultimately part of that is accumulation, but there's a short covering that's happening. So you're breaking over like a main creek. And what we'll see is that sometimes there's like this big pump, and then there's like these shallow dips into the top. So you get this bizarre kind of, not always triple, but maybe like 2 or 3 pretty massive upward thrusts that kind of go up. Because again, like they're not really buying or coming back up just to leave. They're coming back up so they can sell again. So there's a sort of a foreknowledge of the drop is incoming still. And this is where you get the hints of future price action, because usually there's a pretty strong series of like creeks that are establishing like, oh, this is where we're going to go in the future. And again, it's because it's by nature kind of distributive. Like it's essentially shorts covering on the other side of a wave. And so that's what I'm talking about when I'm talking about like a short squeeze here. Like this is a squeeze that's according to like this side. And then if you were to continue to press, I think you would see that there's going to be like another potential one right here. But it may not be as long-winded as I had expected. That's kind of what the whole thesis of the day has been. It's like we talked about this early on IWM, like probably going to come up and then come back down. Well, this happened super fast, didn't it? And yet at this particular venture, it's like at this point in time, it's easy to see how this could build out and still need to come down again. Like there's just plenty of room. And we're really not at a place yet where I'm ready to say, yeah, it's broken out, it's going to go. None of the major ETFs, none of the small or large cap ETFs are really at that place where they're ready to go just yet. So, like I said, it's kind of like one form into the next form into the next form. So certainly like 200 does seem pretty likely here. Even the next push stopping at like 195 would make sense. So this could be a series of big pumps. You know, this could pump up to like 195 and then still come back down, go sideways, and then later pump up to like 200. And I could see how that rounding at the top with some like kind of pullbacks would be sensible. So the difference here is that, is there like a row of them? Or is it just like a couple?
There's one counter, Die.
Okay. Ants. So certainly, like, does this seem possible or probable to me? Yeah, you know. But I would be mindful of like where these are, right? Because I think if you have a push up here and then it breaks down because you get another push up that goes even higher, yes, but is it on the other side of this? This is sort of what I'm expecting. Something more along like these lines. It's like having a pump up that goes almost there, doesn't quite fill the gap, then it backs up. There's kind of a weakness, and then you end up pumping up again just to get to the top of the trend. And the only event in which I can see this really running is if like IWM breaks 200 here, goes up over the top. Even though, yeah, that goes back to that March 5th area. Again, I could totally see like this could be a possible early move that doesn't actually go, you know, just kind of goes and then rug pulls. And this makes sense to me because if it already comes up to the outside here, that would be like a hook locally. It would be like a fake out breakout of the main downward or the main wedge. And then this gives you enough ammunition from a seller's standpoint to then drive the price backwards, kind of like what we're talking about here, to drive the price back and come back down to some particular low by mid-May and then break out. And in the event that I'm wrong, the only thing I can think of is what I was saying before, which is the S-curve. This is kind of like one or the other, you know? Proportionally, they're not even close to the same. I mean, proportionally, I guess you would have to say that if this really did this, I mean, it's pretty close. That's a 23rd right there. So they're pretty close. But this one already kind of lost that trend, so I find that to be curious. It's already come sideways. I think it's already widening outward. So this would make sense. It'd be pretty similar. Yeah, this is a chart that I'm just really not a fan of. I got to be pretty straightforward on this because I was staring at this chart yesterday and I was like, you know, there's a lot of times where I see something like this and I just immediately think about what's happened before with AMC, for example. And then when I'm talking about on the big picture here, we're talking about that kind of phase B bottom potential. I mean, this to me just looks like extreme. If this is the reaction, you know, phase B top, I don't really know how to read this. If and you look at the two charts side by side, it's very different. So to some degree, people would say, well, Tesla held up better from March 12th through the 9th because it's going more sideways. And, you know, if you look here, the 12th to the 9th, it's obviously considerably stronger. but they didn't really have as much of the to deal with tariffs. So there's a sense in which the tariffs don't really make as big of a dent in a stock like this because more production is in America anyways. And I think that's all there is to it. But on the grand scheme of things, on the big picture, Tesla already made like pretty significant lows. I don't think that anybody would disagree with that. Like it's down like 40% or something from its highs. So if you look at the big picture, and you see, all right, well, the S&P 500 came back to February 2024. Well, I mean, this is 2024 right here, July onward. Tesla came back down pretty far. February is quite a bit farther. It's at 200, but it's not like way, way off, It's like a single drop away from, all right, we're coming back to retest that floor. So some part of me thinks that Tesla might actually be a little bit ahead in some regards in this way. If this is like going in for a spring to like 200 or something, this could be already developing like that outer creek that it's going to drop and jump over later. And it's quite wide. So this does put it in a pretty bad situation if it drops here. I think it could be as low as 200 fairly quickly if it comes down. So maybe even by the next earnings. From that point, is it possible it has a more full recovery? Sure. But you're also looking at time here, and I'm like, yeah, I don't know. This is sort of the same thing. If you want to say it goes into May and then runs up, that might be how it does it longer term if it goes down. So the reason I'm like skeptical of it right now is I was watching this one. It just reminds me a lot of distribution. I don't know. I don't like the U shape here. I'm not really seeing volume very clearly. I'm going to go to like a 15 minute so I can just check a little bit better. But I'm not really seeing volume super strong on the bottoms. There's decent volume in this top, for example, and in this top. So, and this as well. Well, this is like a buyback. It's a little different. So it's a mixed volume, I guess what I'm trying to say. So here's where I'm going to kind of draw the line for Tesla, because if it doesn't come back above like really soon, if it doesn't come back above like 260s here, I don't think these advancements are likely to happen. In fact, it may not be, it may not seem fair, I guess, to some folks. And I know it's been holding up pretty well, but I genuinely think if this ends up distributing here, it's probably going to end up dropping really far. Like I definitely could see it coming all the way back down to that gap at like 223. So just keep that in mind, because it's in a bad spot right now if it has a fall through. That doesn't mean it can't have any upside after that, but it's certainly in a position of weakness if it drops back beneath 244. So I'm not really looking for, I hate to say it because I still have some bullish interest in Tesla. I still have a small call position, but for like 320. But like, to me, this could be very easily could be a distribution just by the nature of the way it went, the lack of sufficient checks. This particular little guy, I just don't really like it. You see how it broke over the creek, and this is pretty high up, and then this comes down lower and came beneath that floor. It's a higher high. But it just seems to me like everybody's looking for chinks in the armor on this. And this is a little bit of a weakness as well. So there's just like constant pressure against this to go down, I think. Again, could news change it? Maybe. But at the moment, it doesn't really feel strong to me, And I said the same about SPY to some degree. So I was talking about the difference in the charts is minimal, but like where this might have some pretty big run-ups, I think that you could see some weakness here if it stops short at like 550. And certainly like if it came back down through that creek, it could be very, very weak. So I'm going to say that if SPY has a downturn, I think Tesla is going to get really bloody really fast, like really red. If it can go up here, I'm going to just kind of wait and see if it can breach the 270s mark. The only thing I knew for sure is that it would by the 9th be around the 262 mark. And I'm kind of amazed that it got there. And I told you guys that position that I held through the whole thing. I had a very, very strong opinion that it was going to come back up to 261, 262. And people that were following it in the Discord group would probably attest to that I kept saying, well, I think it's going to come back to 261, 262 by the 9th. That decision's made, because they just set it up that way. I did not see the same thing at SPY until like the last second. But beyond that, this is very vague. And it's just extremely hazy, because it already came up and checked the top of its widening. And then if you look backwards, it's like, well, I mean, long term, it looks like it's testing this creek. This creek was established January, February, about a month apart. That trend coming down. It's technically like kind of above to the upper 50%. So if you look at this and divide it into sections, you would see like lower 50% like buy-in, upper 50% sell-off. So it has to have a change of character, I guess is what I'm trying to say. And I'm just not convinced that change of character is going to be here. I'm thinking that what the change of character might be is it may be that it doesn't come significantly lower on this trend again. Does that make sense? So instead of, and you might be looking at it saying, well, yeah, that's just going to straight down. It doesn't necessarily have to be like that either. You could come back up, fill the 272 and still have a distribution, you know, just like the horns almost on a really extreme cat ear, and then start selling down pretty hard, you know, and that's more normal anyways, to kind of get that last push, which this is sort of weak. I think getting that last push up would make sense, and then trying to trail back down, go back towards the center mark here, and the change of character may come maybe around earnings, if it's going to come at all. You get down to like 200. That to me would be fairly sensible for something like Tesla. And you guys are probably like, yeah, but what about those triangulations? Well, they didn't get met. I mean, the extremity of this move, it pulled it up, but it was met with extreme resistance. Oh yeah, but there's still a lot of room to run. Yes, there is. You know, I'm just suggesting that this didn't have any kind of proper, you can see it pretty clearly on this chart down here on the RSI. I don't think this had any proper backup to the creek. So this sort of lift and float business with this U shape is more typical when you're about to have a massive distribution. You get this kind of midway cross on a cat ear, right? And it looks okay, but then you come up high, and then when it drops, it comes really far backwards. And that's what I'm thinking about for Tesla. Like, I don't think it's going to be pleasant. I think it's pretty unlikely that it's going to just run up and keep going at this point, which might bum some people out. But I think we had that moment of like, this squeeze could happen. That kind of passed us by. Now we're facing a huge amount of resistance going into like the next leg of this. And I think we're probably approaching that point of no return. And this is a good line right here to also pay attention to this guy. This is a cross that we did push, but it would be the very, very, very good place. You can see that gap down right here. So this has been contested. This blue line coming up. This is what I would call the ice, which is a creek that rises with a trend, and then when it's lost, it turns into like a potential hook zone. So look at the spot right here, and you can just sort of see how everything's like pointing into that intersection as like this could be a potential spike. But then as soon as that's done, I think it's done. I'm not convinced it's going to keep going unless it gets above that considerably and holds it. which, I mean, you never know. I guess it could happen. Then you say maybe it could keep going up. But I think it's extremely likely at this point that what we're going to see is like an upthrust. It'd be like a UTAD, upthrust after distribution. And then you're going to sell again coming off that April 2nd region. This has been the zone, the sell zone. I suppose it's not impossible that it could do both, come up really high, because there's a gap there. And also, looking backwards, this is the selling area previously. So it's definitely not impossible that could run up hard and then slide back through. We were talking about that kind of on SPY too, because we were saying like, could be that it pushes up past the top. They all look the same to me, I guess what I'm trying to say. Yeah. So this pushes up past the top, kind of meets the trend there at like 564. Looks pretty darn good because it broke the creek, but then it drives itself back down through the creek. And then we're at risk of like a full distribution. And I'm not putting that on the chart right here, but it actually works pretty well. This was the same thing. I guess if it did that, it'd have to like break down here. And then so on and so forth. Yeah, that actually makes sense. So either of those would work. So I'm only seeing like one out here, and it's not feeling very likely based on everything we've seen. The good news is there might be an opportunity here. I know a lot of people don't like to go short on things, but if you're willing to do like put positions, there could be a really good opportunity here. If it does turn down, because that'll be a pretty sizable move. I mean, to ignore it just because it's downside might be a bit ignorant, perhaps, on our parts. I think you're talking about a potential 20% move down. Now this would be again, looking at this as like an accumulative section, you might think that that's really bearish, but in fact it's not, because if you observe carefully, you'll see that if this is indeed semi-bullish, then you've got like a top already. This could be a kind of phase B top, and you've got a bottom. So this would essentially be a spring action if it happened this way. And so you'd have like a rally, and then you would break back up, come back down, retest the floor. You would do this twice. So I'll make like a highlighted bar here and here. And then you would retest this bottom floor, and then you'd head up to the bigger creek, which hasn't been broken because it was kind of faked out over here. And this actually looks more like a large format spring. And then that kind of makes me think that this just kind of goes. I mean, I don't know how long it would take, but it does seem to be that way. I don't know how far that would go after that. But yeah, if this comes down, this is just an example of one that has the appearance of that 2020 AMC. I don't really know why, but it does. Certainly looks very similar. So you'd have like a distributive action here, drive the price low, and then have like a buy-in right after earnings and bring it back up. And if it's bearish, there's not much of a difference here. The only difference is that when it buys back up, it would be like a LSPY, and then it would come back through. And again, it would be more low volume. There'd be like no volume in the bottom, and it would just chop up like a bear flag. It would never jump the creek. If it's bullish, probably advances pretty rapidly off a high volume bottom, and then it jumps the creek, and it rapidly ascends. And you'd have like an SOS here, and then break out and head back towards probably 320s. And then you'd finally hit that marker. And that's a big picture breakout. Then you're in a position going into the rest of May to kind of have like a, a secondary rally or whatever into June, head back up towards probably some of these early gaps at like 400. That actually looks fairly logical, because then what this is a pivot point. It makes sense that that was there. If you look at the pivot, that's pretty darn close, 1-to-1. So that pivot goes right up to here, and then it exits May 30th. That's really close. So that would be a really, it'd be really straightforward, because what that means is that the in and out properties of the trajectories and the wave are fairly 1-to-1, which is very common when you hit a bottom. Then when you exit, you kind of go out at the same speed, which implies that this is actually like a middle, potentially, and that you don't actually leave till like June or something. So, yeah, so this does actually follow through quite nicely. I mean, I like this for Tesla, and if you're not a big fan of the company, I understand why you wouldn't want to play it, but I also think that, money can be made wherever, so it's your choice. You've got to make that decision. But this is it's a pretty serious potential right here for, I would say, it's pretty straightforward. Maybe back up to like 400. And I think that would be, again, like front running, to some degree, front running maybe market price action. So by the time this is up here, it may be kind of fizzling out, and then the market's still rallying. This kind of a wave, to me, looks very accurate, because on the big picture, Tesla has this big widening, right? It's been coming up, but it has not reached this lowest trend. And what it looks like to me is what I would call the cat ear. So it's missing, like, it's got one, but it had the wave down. It did not come back up to retest this major trend, and it hasn't happened. And it's a little more conspicuous in here because it looks close, but it didn't quite hit it. In my opinion, it didn't hit it. This would make a lot of reasonable sense then, to have kind of this rally moment and at least come back up to like 340, 350, maybe 400. And then it just totally looks like the rest of this would just be like a breakdown period. And you'd finally come back down to like 195 or whatever it is. That's just a normal wave cross right there. Maybe by August. And that's kind of a bearish outlook in the end. But the middle is very bullish. Then it build back up. And again, looking at this big picture, that doesn't even really look that unreasonable. This is very similar to what happened here. There was like initial push-ups, pretty massive drives back up. This went from 230 all the way up to 380. Huge swings before it finally like capitulated. And the intersection of the two major creeks, the triangulation is way over here in October 2025. So it gives it a lot of time. The second ear is usually like full of all kinds of misdirection. So it would look like it's really bullish most of the time. It would have these like backups that break really hard. But then in the end, it just kind of loses all the creeks through the four moves. And that's where you get finally like a bigger drop. And this would be sensible if the goal is to kind of take it back to that 200 level longer term without breaking significantly to new lows. This doesn't look wrong to me. And in fact, I think my guess is that this roughly measures out. Yeah, roughly measures out to being 50-50, wave 1, wave 2, which is right here in September. That's just looking at the bottom. If we look at the cross, like where it jumped over, that's right there. That's usually what I like to use as the 50-50. That's very, very, very close. It's right there. So I've got my little icon on it right here. That's back in June 2024 from the bottom, 2022 in December. And the doubling of that leads to November 2025. So it's actually a really clean, like 1-2 wave. and then it comes down and checks all the creeks, and then it has a possibility, though it's not guaranteed, that it has kind of a major move into February. That's kind of what we had talked about on a lot of the market. But in this case, it could just be a massive squeeze that goes up, maybe not to all-time highs, but perhaps if we hit a bottom right now, for example, and that bottom is around, I don't know, what did we say, like 200 or something? Yeah, maybe right there. This would be an opportunity to maybe have a big rally again, almost like a head fake, but going from like $200 to like 300 is a huge move. Huge move. And this kind of just the way Tesla is. It does tend to have massive swings. So I would expect there to be some kind of a trend here, and that intersection would make a big deal dent maybe in February. And that's how it could go up with the market, but without actually breaking to new highs or something like that. I'm not saying that Tesla is definitely bearish long term, but they've got some serious road work to do, no pun intended. Because they lost a lot of ground to BYD, which is their main Chinese competitor, who has just surpassed them in terms of sales worldwide. And their numbers are dropping really bad, probably because of the optics and also the fact that their leadership is not really focused as much on the company, and their truck was a really big flop. So isn't doing all this stuff trying to salvage it, but I think they should just abandon it. There's always been car models that do that. I mean, remember the Plymouth Prowler? You don't see those anymore. There's dozens of them. The DeLorean was one, actually. That was kind of a flop, even though it came really... the Pinto, yeah. My wife's behind me, like, she's like, remember the Pintos? Yeah, I remember those. There's always been cars that kind of come and they just don't really do well, and then they don't stay on the market more than a few years. I think the DeLorean was one that became really popular, obviously after the movie, but it wasn't, if I remember right, it wasn't like a very long-lasting vehicle. It's hard to find any of them anymore. So yeah, I personally think they should just get rid of it and just try something else. They need a more economy class vehicle. They really put themselves out there as this like high-end, premier thing, and I get it, but they're gonna lose. They got to do something. They got to do something else. And I don't want to talk about brand damage, but they obviously have a huge amount of brand damage. So yeah. So anywho, this would make sense to me for like a long-term downtrend / maybe recovery, and it's possible this is a wedge that then later breaks. We've been talking about 2026 as probably being sort of a down year, where 2025 might actually be semi-okay. I think it's very possible that 2025 ends up being a relatively decent year by the end, and then slightly up maybe. I think 2026 looks kind of not good to me. So this would make sense. I guess it could be like a breakout zone for like a wedge. Yeah, I don't know. Let me just hypothesize this. I'm kind of guessing, but I'm going to see what that is. This was another target I had, and it's kind of strange how well that worked. You don't really have any actual price action there, but that was the target, so I use it as the top. And then this is the 618 level. That's really actually quite nice. Well, that could work. And then it's a 60% move from the bottom to the top if it breaks out down here. Interesting. Yeah, I don't know. There's a lot of questions there. What if this is like a 5-wave? 1, 2, 3, 4, 5. It can't be a 4 then because it came beneath the bottom. Never mind, I can't do that. It could be 5, but it wouldn't be like a traditional Elliott wave. Still, I am curious. I'm going to measure it anyways. Let's see what that measurement is. That's pretty high. Well, anyways, mathematically, does that work? Yeah, it's possible. That could work out. If it broke down here, I think you're more likely going to get kind of like a slump. Take you back down to like 150s. And it probably would end up being some kind of crazy like reversal thing where it like drops through the triangle and then reverses the other way, and starts like to build out again or tries to build out again. That's a lot longer, way off in the future. But so in the short term, in the interim, I do think this could locally be a kind of bottom, like a V-shaped bottom that comes back up to near 350 by June. I was thinking a lot today about that, and I was like, I have a lot of these big picture ideas, and lately I haven't really cared that much about the short term except to maybe play a few, smaller short-term bets here and there. I haven't made a lot of effort to really build out like really long-term positions. For AMC, for example, and GME. And I'm not bearish on these charts. I'm bullish, but I'm just kind of waiting for that potential, confirmation. I mean, it should be there. If it's bullish, it'll be there. If it's bearish, it'll be there, I'm just kind of waiting for it. And we haven't quite gotten it yet. So I think that's probably why I haven't really pulled the trigger on it. GME is probably the most confusing one to me because it has the least consistency. There's a massive amount of consistency on the big picture, but it has the least amount of consistency when it comes to like the local area, and like what would that look like? As in, for AMC, I can only really see a couple different things happening. For GME, it's like half a dozen, and that's too many. There's too many possibilities. So they're trying to narrow it down, but there's been a lot of challenge to doing that, I think. There's a strangeness to GME's charts, which is that these trajectories tend to follow through a little bit better than some of the ones on AMC, for example. This actually hit like a day later, it was like right there. And we had done the exact same thing on every chart, and GME is like the only one that kind of hit pretty much on the dot. And this has happened before on GME. I don't know if you recall, but when we broke out back in October into November, it was really similar. It had that trajectory to the upside in November, and it hit like right on the dot at the almost exact same day and time. It may have been a little off, but it was like really, really, really close. So I'm just kind of curious about the nature of that, because I'm like, I don't really know why GME has been so consistent in that way, but part of me wonders also if we're kind of doing another rinse repeat, sell down, back up kind of thing. I'm not really sure how I would figure that out anyways. We've been talking about it a lot on AMC, and I've done way too much on AMC lately. But those build-outs have been largely fairly easy to read because they're essentially the same thing over and over. As frustrating as it's been, they've been very consistent, especially since December. It's a little different on GME. It's not really been following the same motif. You know, on the big picture, we had measured out these cat ear structures, and I was working on trying to determine if this was like a center mark, and I had talked about it quite a bit. What if the cross of these two waves is the middle of the cat ears, and that's how you can actually see if there's a cross or not. And it was very true that this was the center right here. See these 2 points of interest? This is August 20th through October 20th. These were 2 different waves. So one is like the accelerating wave. The other is the decelerating wave, the down wave. And then we did the same thing here, and I suggested this could be a cat ear where there's a middle coming up, and that we would be essentially in the middle by April 3rd, which I know it doesn't seem reasonable that that would have been an accident considering what news happened on the 2nd, but that's what it was. I had hypothesized that we would be up based on this motion, and that did happen, but the swings have been extremely volatile, mostly due to 2 things. One was the Bitcoin offering, if you want to call it that. There was a note that was given, a loan, essentially, that was taken to buy Bitcoin. And then the other was, which many people probably saw it as dilutive, even though it definitely does not have to be. That's not true. It doesn't have to be. It just depends on what they do. If they do decide to get the shares instead of the loan. And then the other has been all the insider buying. Oddly, there's been some pretty massive institutions that have exited lately. And I'm not saying like they're shorting. I'm saying like they're just selling shares on this upside push. So I still see this as a bit of a tricky one, because there's clear evidence to me that this was a weakness. In fact, there's like a double, almost like a triple downward motion right here of consecutive lower lows that were pushing beneath the, ultimately, this is what I'm calling the ice level here, which is this rising trend. So that would be a bad sign if it's not able to hold on to that. You're more than likely going to plunge beneath and head towards what we would call like a creek level. And I think this is where things get kind of dicey on GME, because the creeks are very, very, very steep. And previously I had talked about how really like the continued downward motion of this creek would lead it to like $6, which is really low. And that seems like way too low. For a lot of people, they were like, there's never going to happen, never going to get there. And I'm like, yeah, I don't know. I don't know if it's ever going to get there or not myself. Like, I don't think it has to. No, it's not like a rule that it has to go down and hit every creek, depending on the way the thing is set up. But what is apparent to me is that from the big to the small, this does seem to be an iterative motion. You've got the same exact motion building out. And a lot of time people maybe have a little bit of a difficult time seeing what I'm talking about. When we talk about these build outs being iterative, what I'm saying is that this whole pattern is essentially like the same pattern that we're experiencing like here. And this isn't going to include all the wicks and stuff, but this is roughly like the exact same experience. Okay. And what I would define it as is not necessarily something that's like a fractal perfection, but something that's got a repeated pattern of push up to this, come back to this kind of thing. So it's really, where are you going? It's not about, oh, it looks similar. Well, yeah, it looks similar. You know, that's easy. Anybody can do that and say, oh, it kind of looks the same. Well, it kind of does, but like, where are they going, right? One of the things that's noteworthy is like when this comes up and breaks out to the highs, when it comes back down on the big picture, and I've done this before. Let me turn off so you just visually can see better. When it comes back down, and I'll go to the daily or something. it comes back down, it retests those tops. And I would suggest that breakdown is indeed quite vital. Where it goes to at like 990 or whatever it is, 980. And looking back where those levels were previously, they're kind of at this previous top, like the center of that distribution that happened. And that's the big wave down. We talked about this before because it's really hard to see on this chart without it being on like the weekly. It's hard to see that as an iterative motion unless you really focus on one thing. So what I'm going to do is, you focus on that trend, it's very easy to see it. If you don't focus on that trend, it could be a little bit hard to spot it. So this motion right here is where yeah, it was dirty. I put it in the laundry. It's in the laundry basket. If it wasn't dirty, then it's just sitting in there. And it's not actually supposed to be dirty. So this setup right here is very similar to what we see in this right here and this build out right here. So the setup is like a wave down, right? That creates a resistance and a top. And if you don't want to go all the way back to the beginning here, you don't have to. You can just do it here. If that makes more sense to you, that's fine with me. So locally, it's just a wave intersection, right? And ultimately, this helps to define what will become like a future top. And you can kind of like pick out a couple different markers here. Like one is right there, and then the other one's higher up. And this is essentially like a projection for where it's going to be later when it goes downward. But then notice that this is very similar, right? And you can take this all the way back to there. It's a really similar setup in a lot of ways. So, yeah, Carter already did that one. The other one will be like a little lower. This is like going to that hook, the drop down period right there. It really is quite tight, which is where we are now. Love you.
Love you. Check for ants a little bit.
I will. And then when we look back at where that level is, it's like, I think I said 2310 at one point was kind of like my main one. There's another one at 24, which is where he keeps doing the dilution, or where he did do the dilution. But I think 2310 was the one I picked out as like the more likely candidate, because it's where the drop down happens here. And so that's why I picked it out, is I think that's the more important one. So if you look at this big picture, there's certainly like a lot of evidence that would suggest this could be coming back down a little further. I mean, if you look at it as like a cat ear that's working itself out, it doesn't quite seem done yet, you know? So the question is like, how far along is it? I don't really have a super strong answer, but I would say that if that up thrust is the key, then you have like a walk down level, this could be thought of as much the same here. And I don't know if that's a mistake, because it is a little bit premature to say like, well, that's it. That's as far as it's going to go. It's already iterating again. Here's why I think that could be a mistake. Because in reality, it's very difficult for me to make that argument that it has to be that way. Because this could easily be the bottom is here. And it could easily be a situation where like, oh, well, you're really just kind of like chopping back up. And this is not done yet. Because if you look at each of these other ones, there's clearly like a walk down that happens. And it's fairly straightforward right here. It's really easy to see it. That walk down is really easy to see. There is one here, don't get me wrong. But I'm wondering if it's too small. I don't know. Well, that's no help. Well, it kind of matters, because if the walk down's already done, then that means that they picked the same level. Like it's already doing the same thing on the same level. If it's not done, it means that it's potentially still the same level, but it's not quite finished yet. And we're really in a situation already, you can see why I was like concerned about that drop. Because we're kind of in a situation already where it sort of looks like maybe we're already doing it. Maybe we're just going to go, I had this like really low. Yeah, but that doesn't quite go back there. Actually, it kind of does. So this is like, if I had to just pick one, and let's just do it this way. If I had to pick one, I would probably pick the beginning of each of these trends. I wouldn't use the lower ones that have like the drop values or whatever in consideration, like at the tops. Probably use that. And then I would use this. So what's the problem, Looksy? This doesn't seem like a big issue to me. Well, the problem is that from a distribution standpoint, if you look at it from this point of view and you take it to the logical conclusion, from this point of view, like a distribution would be very likely because it's rising. It's like rising iteration. So what I didn't include was this bit right here because usually when I do that, it scales really weird. So I'm going to not do that. Instead, I'm going to do it like separately, which is like that. So that's your first iteration copied to the second. So it's the same motif. What I'm trying to say is that the operators are trying the same thing to get the price down that they did before. It's largely exactly the same. There's not really been much change. The question is like, well, how successful was it? Well, it came down to the previous top, right? Okay. Did it do the same thing here when it dropped down? Well, the answer is yeah. I mean, it did. So once again, it's very, very, very similar. It's not exactly the same, but notice like where we are, and that's why I drew it was like 2310 because that's where the drop down is, as this is where the drop down is here. There's another point of interest, which is the bottom. So this actually comes back to this preliminary sell-off, really. This is a highly predictive sell-off, right? It tells you where it's going to be in the future long term. We did something similar to that on this backup, which is we backed all the way up to 1753 here. So there's another argument that could be made that, well, maybe that's the real ledge, right? And it was used. I mean, it is like a secondary motion right there. Maybe that's the real ledge, and it's not quite there yet. And that's what I'm trying to say. Like, I don't really know. It's hard for me to know exactly which is which is why I've said that I don't think this is super, super simple in some ways, because while I'd love for it to be like black and white, there are elements of this that are not very, very clear. And if this is the middle of a cat ear and this was going to be the 1, 2, 3, 4, it would have made sense to me if it did like this, because normally you'd see this is a repetition, right? So you would see the same thing happen here with a big upthrust, which we did have. We did have it. There's a massive upthrust there. News is news. I get it. But you would expect there to be like the same thing. You would walk back down to that level and have an upthrust, just like it walked back down to this level and then had an upthrust. That's exactly what happened. So when you look back at it, it's like, well, if we were right and the upthrust happens after this level, then it would have made sense that there would be a massive upthrust here after that level. And it did happen. Was it a little bit low? Maybe. Maybe this is, again, something that we got a little off. I can't really say for sure. If I'm a little off, I'm a little off. I put it where I put it, and I'm going to leave it there for now, because I still think 2310 might be the level, but it could be lower. I don't know. It wouldn't kill me to be wrong. But that could be it then, if that's the case, because you're like, well, and what is this, Well, remember, iterations are funny. They have multiple things going on, right? So this was indeed a triangulation of that walkout, but there's also now like a macro trend here. And that macro trend kind of plays into a lot of this. And I got into that previously, and I know I'm just kind of rebuilding my chart, but it's a good thing to just see the big picture and remember why this is a contended area, because the macro chart here is quite fascinating. There's a lot going on. And I've contested that maybe we don't include the very, very bottom, though we could. Because if you look at where it takes off from and you map it that way, it actually makes a lot more sense, because these particular points of interest suddenly become very, very, very relevant for the overall health and well-being of the stock, especially here in that breakdown. It's really clear to me anyways that would be highly significant. And then when you look at the big picture, it's like, oh, and there they are, they're still playing out. So regardless if it's the middle or if it's just some other, maybe it's a fib channel and these is just one of the fibs, it doesn't really make any serious difference. This is still like highly important, right? Because you can see when this has been support, it holds pretty well. But then it's obviously like, hey, this was an SOW, like it was breaking down below it. When it acts as resistance, it almost always goes into like a tailspin and crashes. So this was kind of the way I had set it up. And the reason this matters is because then when you look at triangulations, sort of changes the picture here. Because you can see like certain triangulations have played pretty well, into the grand scheme of this. And I think there's a lot to be said about this, maybe beyond that. But one thing that would be that like right now we already came back up to that marker. And then if you look at these up thrusts, each of these happened almost in the exact same spot in some regard. I'll make these like a different color. I'll make them like, I don't know, yellow or something. They're not really like bad. They're just kind of there. But you can see that marker happens along the same thing too. So huge whip arounds, right? So this is my question, and I don't know the answer to it just yet. My question is, if this is ultimately like a lower walk down, so let's say we're kind of getting used to certain things, we think that this is all right, but then this actually walks down lower. It could be that, again, we were wrong about, or I'm wrong about, maybe the nature of where that is here. There's a parallel, and this hasn't escaped me yet. I'm just trying to like get to the point. I'm talking around it in circles, but where this could end up being like that green buy-in that has a little bit of a weakness to it. Like they're trying to like push it, So again, this is a parallel. It's not like rocket science here. It's certainly very easy to draw it, in my opinion. It's certainly evidence that it's there. You can see the 1, 2, 3, 4, 5, 6, 7, 8 interactions, 9 interactions with that particular trend. This could be evidence of like why we might come back down if we were to break down here. So when I did the build out, if you guys remember, I had measured out these markers and I found that there were these particular points of interest at like quarter system, and they had actually predicted where those run-ups might be. And those quarter systems were fairly accurate. Like it was really right on the dot. I thought that was very strange. So dividing it in half and then in half again. Yeah, but but what? But you're never right, Booksy. Yeah, I know. But like, I thought it was really interesting. I'll just say that the quarter system did what it did was really fascinating to me. So it doesn't have to be perfect to be pretty close to right, But I think that we also have to sort of take into consideration, like, there's other things here that are kind of complex, like the way that this moved in that big spring, or that big spring slash that big buy up. It's like really confusing, It's not as logical as you maybe would want it to be. Because when you look at the big picture, you're like, yeah, but this ran like a bajillion percent. Well, it does add to some of the stress of the questions. There's other things in question here. Like, yeah, this came up and hit that marker, but when you look at this relative to the previous, the way you've drawn it out, maybe this is not quite right. You need to be using some kind of like lower trend here or this or that. I don't know, man. Things change really fast when you start dragging lines around and you start messing with the triangulations. You might think, oh, I'm right, and then it's not really what you expect. If you use 50/50s here, it's going to look really different, so on and so forth, right? I think 50/50s are a better guide for like wave like direction, but in this case it's so flat that it's hard to even know. It's basically just a parallel. And then if you do it the other way, it's probably pretty bad, So this whiff around to me is like wonderful. It's in the right spot. But then what's going on here, if this is iterative cat ear motion, like ear 1 into 2, which it seems likely, then this is also iterative motion. So iterative pop, iterative pop, iterative pop, right? It kind of stands to follow that this might continue as a pattern until it doesn't. So it's almost an indefinite kind of motion. And I just don't know if we're there yet. I kind of feel that we didn't actually hit it yet, and that we're basically in like the middle of the ears. And the ears have to keep having middles until they don't, right? If I look at this big picture, I'm like, nah, it definitely just looks like a cat ear forming. I mean, you can see it pretty clearly in that motion. And there's a huge scoop up, push up motion. I hate to be the guy to say it looks distributive, but it does look distributive. It also looks like a squeeze. So it looks like a massive short squeeze happened here, But at the same time, it's like, well, that really would be to like try to load up. I know it's backwards than what a lot of people will be saying about it. They're saying it's like bullish. It doesn't matter. It's GameStop. It's bullish. But just remember, like, the operator is going to make it do whatever they're going to make it do. And in the end, if there's enough retail buy-in on this stock, they're probably going to have a lot better time taking it up than taking it down. But for now, if someone showed me this and I didn't know what this chart was, and I saw this motion right here, I'd be worried that this is like going to do a 1, 2, and then 3, 4. And we talked about this before, but like there'd be some kind of like a double bounce here. And you'd have to see it break above in order to keep going up. And if you didn't, then we'd be going down. And it's completely backwards from the expectations that most of us have. Also completely backwards from what we had on the chart for February 2026. Okay, so these iterations are like continuing, right? How long are they going to keep going? Well, we've already sort of just had another one. As in theory, if that backup was indeed the same idea here, I think you've got to then take into consideration that this could indeed be correct. Like that could be the buy up right there. And I talked about this previously because this does lead out quite a ways, but there were a lot of different possibilities here, and I just kind of got stuck until I did the chart that I did, which is the wave. And the wave sort of changed the way I was able to see it, at least in my opinion, because like before that time, I felt kind of like, well, all you're really doing is saying that the cat ear has sort of an embedded iteration, which we already know the answer to that, which is, yeah, it does, right? And in theory, could that cat ear be finished? Maybe. It could be finished right now. That could be the end of it, and then it could just go up. So what are you really saying is you're just waiting for breakouts, and this is a big waste of your time, right? Well, somewhat, because like that's not helpful. So iterations are not complete without looking at the opposite. And I do think that that's true. Like there's an element of this that has to be taken into consideration, which is that ultimately like the goals here should not be understated. The goals here are to bring it back down. You can see very clearly that the goals here are ultimately to try to bring it back down to that bottom again. I mean, that's just the direction that bears are trying to continuously head. And I don't think that that's accidental, though I do think, at this point we're probably like, well, that's never going to happen, Sure, maybe it's never going to happen. I get it. And I don't necessarily think it has to happen either. But at the same time, I think right here, that one looks pretty correct. This one would be the indication of the first spring. Probably wouldn't use that. Probably use this one, which actually starts to look really similar to where that bottom is. That was where we had the channel, remember? So if there was a channel breakdown, that would make sense to me. I'm not sure about the rest of that. Anywho, a distribution here would certainly, it would make sense. This may not make sense to a lot of folks because they're like, well, there's no way it's ever going to get back down to 79 cents. That would kill everybody in their positions and so on and so forth. I know. I'm not saying it will. But I am saying that you have a chart that has markers on it. If I can find the silly paintbrush. So this would have been the creek. And then this is the creek cross right here. So in theory, like this is the last direction that the creek is heading. Which does fall in line with this idea that it would be heading back towards the bottom. Once you've made a new bottom, the creek changes. And it made a bottom right here. So now at this point, there's a new one. I'm not going to use the draw tool. And that would be there. And so this is the new like adapted creek because that's where the bottom was made. And then it was retested when it came back down at 960. So that's where the new creek is. So before you get all mad and say, well, Booksy says it's going to go down to 0 or something. Well, right now that's where it is. And it makes sense because usually, again, a creek is going to kind of fall into line with the last known cat ear trajectories, so on and so forth. So this would end up being like a split between them. So if this ever does have a fallout, this is the bear plan right there. So it's going to usually have a 50-50 around some marker, a massive inverted squeeze, if you will. Oh, it'll never happen. Well, never say never. Why aren't you just looking at upside, man? Well, that would be dumb. So here's my ideas about GME and reality, the reality of GME. And I don't know how it's going to happen. I'm not like, again, I'm not like positive that's going to be one way or the other. But I think that when I looked at the waves, there seemed to be evidence that there's going to be, there's a potential to go down to 17, but maybe even go down to 6. But those could be like phantom targets. Those could be targets that are not going to be used. And if they are used, they're really just used in order to kind of pop down and get liquidity. Now, $6, again, seem like really, really low. And it is low. But it's not illogical in the sense of like, where is the liquidity at? It actually makes a lot of sense that you might come back to about that $6 range, if you need liquidity. Because notice where that creek is. So there's this idea that we had that we tossed around that maybe this thing actually has a kind of a nasty spill. It could go to like 6. or something like that, right? Before too long. That nasty spill would like prop it up here, or down here, I should say, and then it could potentially reverse. But weirdly enough, and this was the weirdest part about the GME chart, weirdly enough, the 6 marker didn't look like that would be like a bad thing. It actually looked more like a terminal shake, because the remainder was actually just a reaction back up. Like it left behind the up wave if it does that, which typically means that the main purpose of it would not actually be to distribute, but rather to be coming backwards in potentially like the most massive move that GME's ever had. And I have a question, because I do think that this is very possible, is if these iterations keep going the way they're going, what makes sense to me as a cat ear goes is that you get more volatile, but there'd have to be some kind of a SOW if it's ever going to go back down again. So it's weird to think like, I don't know, I can't really imagine 17 being much of an SOW. Not saying it can't be, I just can't really imagine it being a really strong one. I will look at this, and now I'm going to show you guys the waves in just a second, but we'll look at this really quickly. I want to show you what I mean. So I haven't really spent a lot of time thinking about like how do I want to load up on something like GME or AMC going into the next few months. Even though I'm still pretty bullish about it, I'm wondering about the nature of what happens here. There's like an inverted ear that's going on that I find to be pretty interesting. And that's right here. You can see this pushes up, and there's this really gnarly like sell down. Again, this is an upside down chart, so it's actually a buy-in, right? It's this really huge backup. What's strange to me is it kind of reminds me of the same exact problem we just looked at, but upside down. So it's like, oh, well, you have this push up. This would be like a SOW. If we were to look at this in our upside down land here, we probably think that that's like a bit of a weakness, right? Because where does it have supports? Well, I had support here at like 26.5. Again, upside down land. But it also had a major support region right here that ultimately got tested and broke, you know. And weirdly, there's a creek here that just doesn't get met like ever again. And I think it's a pretty important one. This is one I'd probably use for later. But notice that the value did come back pretty darn far. Comes back and retests these levels. I think it actually goes below that one. This is like huge backup if that were the case. Let me double check here. Yeah, it goes below it, or I should say above it, because we're in upside down land here, right? So what does that mean? Well, I think the dominant action was to retest this. So I don't want to like get you too excited. I think the dominant action would have been to retest, which is exactly what I was saying before, would be to retest like the major creek cross that happened back here. I don't think that's very hard to like prove. You can kind of just visually see it, but also notice that when it jumped here, it just doesn't ever check it. And this is a pretty major resistance on the big picture, the big breakdown moment. So this is essentially like a retracement on like an M cross, like a 1, 2, and then a 3, 4, and then it has a big retracement, right? So if I were looking at this from like an upside down perspective and I saw this 1, 2, and then it has like a cross up and then it goes 3, 4, but it doesn't ever check it, I wouldn't be surprised if it came back down and checked that level. And we're kind of seeing that, for example, like on AMC right now. We are? Yeah, we are. That's what I was saying. Like I thought it was strange that we didn't come back earlier, but there would have been an expectation here on this rise, like 1, 2, 3, 4, that you'd somewhere in here come back down and check like this wave cross. It just didn't happen yet, right? So it looks really bad, and you're like, well, that doesn't look good. I mean, it's a very similar setup. It doesn't have to be like one-to-one to realize like, there's a lot of similarity there. One is upside down, right? The other's not. But in terms of like the way this moves, it's pretty straightforward. So 3-4 is probably over here. I just misjudged where it was. But I can't even tell you now. I guess it would have been there. But it still looks really ugly to me. I don't know if I would have used that one. Maybe that. That would make sense. Here and then above. And backed up to it. So isn't that weird how that works? Because it's like, well, yeah, I mean, it's the same thing, but it's kind of upside down. Well, naturally, like in this particular situation, we want to go up. But there's possibility still of like downside. Normally, and if this were to break out back to the upside, what I'd be looking for, I guess like, this doesn't bode well, Booksy. Just be patient. Would be, it may not bode well, you know, but this would be like a break above here. This would be like an M cross that breaks up. And then I would look for an SOS, and that's in the right spot. So everything's kind of where it should be. Usually this goes up above, though. I don't know why it looks like it does. I guess if it does what I think it does, then this is what would happen. Something like that. It'd have to come above here. And ultimately, this trend will get recaptured because that's the ice. And that's exactly what it would look like. Now, in the grand scheme of things, these could be very different setups because of the way that they build out. So I don't want you to think that it has to be like this on GME, because you're like, well, on the upside down chart, then GME just has this massive push, and then we just die, right? We would just go back up and hit the top. Not so much the case necessarily, because in the wave, there's no second count. Like it doesn't even have like a jump yet. And there's a lot of possibility here. And this is why I'm starting to wonder how wonky this is going to get, because there's like these massive deficits that could be met really early on. Just huge lapses in the chart that I just find to be very strange for this kind of a setup. So let me go ahead and get rid of all this gunk. Yeah, I'm getting rid of a lot of lines, but that's okay. I know the waves are there somewhere in the chart, so I haven't even put those on the chart yet. I might do that in a minute. But I just want to get rid of some of this clutter. There's a lot of clutter here. Forget it. I'll just redo it if it's necessary and I need to bring it back. I'll redo it. I really want to get those waves back, though. Let's see if I can just find the S-curve. Double S-curve. Double S-curve. Well, that's not it. That's not it either. There's too much stuff here. What? All right, there's the one. There's the other one. All right, we can turn off all these other ones. I could not find them. I was like, where are they? They're not here. Or just have all these other S-curves on here for other things, probably. All right, those are the big ones. Yeah. So one thing I'd be worried about is if it doesn't cross up. So I was just saying on AMC, if this crosses up and over, it's bullish, it has a big run. But one thing I'd always be worried about is that this is distribution. And if it's distribution, then this usually hits the ice. We retest it. This happens all the time on AMC. We retest that and we just reject off of it. We go into like a little distribution and then we drop. Happens all the time. Okay? All the time. It's called a hook. I call it a hook because it's a hook. So you're dropping through here. There's a little bit of a weakness. And then if it rejects, you come up top and you don't end up breaking out. And then when you come backwards, you end up dropping back down to this creek low. Right? And then we have to kind of reevaluate it all over again. Yada, yada, yada. Maybe it goes, maybe it doesn't, but it looks kind of bearish. That would be like a bearish setup right there, okay? Even if it doesn't do this, this is still a very important marker. This could end up being a bad signal later on. This looks really bullish to me, though. I'm not going to lie. This setup looks pretty nice. In fact, I might even trade it today because I'm starting to really like it. I'd like to look at that. Like, we may be in for a decent kind of a squeeze moment after all. Even though it's bleeding off to the side, I think that's okay. That's probably was bound to happen. I think it's going to end up going to like 350 and having like a big buy-in moment. These parallels are still there. We're just kind of pushing away from them. I think this looks really bullish. And that volume and that bar coding. Well, anywho, I don't want to miss it. I know it sounds weird, but because I'm not usually like this on AMC, but when it looks good, it looks good. Why can't it just drop from here? I mean, anything can happen. But this, to me, really smells like those buy-ins that happen on AMC. Usually there's like a 1, 2, 3, 4. This one's kind of ugly. It's like a 1, 2, 3, 4 down. You can see it here a little easier on the RSI because of the way it did it. But then this buy up, if it holds where it's at right now and it breaks here, it has to go over 3, yeah, but it's in a really good position to make, I think, an advancement after that. Maybe sets up into Wednesday for a Wednesday move, but it looks to me like it would go potentially, and it's not a guarantee, potentially go pretty darn far, pretty darn fast, like we said before. So I like this setup. I think it's a good one. We don't usually see the setup like this on AMC unless it's going to go. I'll get back to that GME one, don't worry. But first I'm going to do this. What do you do, Buxy? I don't know. Maybe next week, double the time it takes. They're super cheap right now. Nobody thinks it's going to go, I guess, to 350. I mean, there's a possibility this is like an LSPY and it fails and drops. I mean, I guess it's possible right here that it doesn't even attempt to go up again. And then it drops down and then probably come back down to this creek pretty low. So why do I like it so much then? I don't know. I guess because it's landing right on that marker, it seems very convenient as a place to break out and go. and kind of like melt up. They're so cheap, it's almost like who cares? It takes a couple extra days. You only really run a risk if it doesn't go anywhere. If it just kind of flattens out and stays sideways forever. Where else have I seen this? So the other place this happens is in a wave when this is 1, 2. So the first one's like pointy and the second one's flat, like a cat ear would be flat. So it's a cat ear motion, but there's somewhere else we see this that, sorry, I know I'm like got distracted. We're talking about GME, we'll get back to it. Where does it go back to if that happens? Yeah, I think I'm right. I think it's like down here. Because usually it would be back towards, I mean, there's a lot of ways this could happen. It could be really low. I guess it could come back all the way down to here. To like the floor again. But if it doesn't drop beneath this creek, then I think it's bullish. Because right now, like, that's the thing about these buy-ups is they'll drop, it has a big pullback at the end that looks kind of bearish. But if it doesn't drop that creek, it's not bearish. And I don't think it did. So it went from ear 1 to ear 2, and ear 2 has this cross up. It's hard to see it, but if you look at the volatility right in the middle here, that's like the press down. There's like a second ear forming, right? So there's like a 1, 2 within that. So we always talk about these as like iterations. This is where it comes into play. Because that would be like the 1, 2 right there. See that? And that's all part of the second ear. So that back up right here, there was a weakness in RSI, but it already fulfilled, like right there. So if this holds, it's going to break and go like really, 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 really far. I'm going to risk it. I think it's going to go. I don't know why. I think because of the way it's shrinking too, this like really gets me going here. Because this, you guys are like, what? Get you going, Bugsy. What kind of channel is this, man? Because it's breaking down in like a series of these drops. It keeps losing momentum, but like the volume is nowhere. And it's like barcoding. So it's totally like continually iterating. It's the same thing, same thing, same. It's just like MM. It's like trying to kind of get the price to come back down. But again, if it doesn't drop beneath this trend, I don't think it's bearish. And it hasn't gotten there. It could have a dip. It could even like double bottom, you know. And actually, I think... I think it's going to do, I think it's doing like a local spring. I think it's going to dive, but I think it's going to recover. This is super risky. Yeah, it didn't make a lower low there. It held up. I think this could give some serious whiplash. Where else would it go? There's nowhere else to go here. Maybe that way? So that could break it down. That's possible. Even that doesn't really feel... It's all kind of the same, isn't it? This pocket right here. Where is that at? Why is it trying to get there? There's a weird kind of gap zone there. Oh, it's that top. That's possible. We didn't check that top except for right here, and then it punched back through it. So it may be that that needs to be confirmed as a support. So there was a weakness there. So we may end up coming back down that far. That might break the trend, or that might break the chart a bit. But I'm also using like this previous top as the creek, and it shouldn't be that. It might be a bit steeper. Ah! There we go. I was like, where? There should be another marker there. That one's kind of weak. It should be this one. The first one. None of these fit like a glove. They're all kind of like slightly off. That one's pretty good. There's a lot of interaction there. There's a gap right here, a resistance that kind of is pushing underneath it, and then it breaks above it. So let's not use that wick. Let's use the gap up value. That one might be more convincing. That's really low. Mm-hmm. This is kind of interesting because, and there's a lot we can unpack here, but the nature of this to me could actually be really, really, really bullish. That's why I'm like starting to stare at it a little bit more. I don't really pay attention to AMC much lately because there's not really much to pay attention to. When the chart is just kind of chilling out and the rest of the market was doing stuff, you're like, all right, well, it's obviously behind. There's a lot going on right here. I'm specifically using these wave crosses, so I'm really focusing my brain on like the bigger wave crosses. Like one's right here, this is the top, converts into a bottom, and then there's the support, and then the resistance. Resistance, distribution, 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 distribution. This is where it touches, jumps over, punches through it, which is not great, but ultimately comes back up, holds it. It makes the low first, then it makes the high, and then it makes a higher low. So it's kind of bullish in that way. This would have been looked at as bad. But the rest of this, then it sets up, does kind of the same thing. You can see the setup. Again, I'm on the 6 minute. It may be a little challenging to kind of build this out perfectly. You can see that 1, 2 here, and then the push. Then the sell back down goes really low. And it does punch pretty low through it. I'm not a big fan of that. But at the same time, there's so many of these right here that it's kind of like, oh, well, who knows? Like they went back and they checked that. And then I think they checked this one. Let me go over here. Yeah, right there. I was trying to find the line. Should have been right in that breakout. Usually you can tell because it'll be like a series of almost like fib fans, right? So you see like the check and then the back test trying to get like lower and lower to each of these breakout points, like highs, support points really projected down. But the big picture here is still one that I think is relatively, ooh, that one looks really good. I didn't see that. It's still relatively like bullish because in the grand scheme of things, if it can hold up on the bigger creek cross, then these iterations will be really strong. So you get like a chop, 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 and it starts like diving. This is what I call like a shallow S-curve, because it would be building out in a way that's accumulative. And as long as it doesn't break here and go way below that creek, I think it could go down to 283. And it would be probably fine. That's about as low as I'd want it to go, though. And after that point, I think it'd be danger zone. But this could be like a dip before a rip kind of moment. So anyways, I bought in. I'm not going to pretend that it can't go down again. It's definitely possible this goes to 282 before anything. That's 6 cents away. Anyways, so on GME, you can see a really similar kind of setup here. You can see that we actually went down to that creek body. But there's other ones here that we probably haven't checked yet. And one of the things that I'm most curious about, and I guess if in the example that I was showing, usually it's like the top, this to maybe the middle of these ears. So where there's like a 1, 2, and then the 3, 4s on the other side. Even if there's a cross up, I think that's a really important marker, because I'll use the same things previously. I think it's super significant. So what we do matters in terms of the wave cross, where we put them matters. And right now you can see the one that we're contending with is very far, like it's up here at like $60. So again, just kind of a point of interest to note is like, well, yeah, I mean, it could be there, but is there like another? Well, not really. This is like the next one up. So the steepest one is the most local, and that's this guy. And we're doing it upside down on purpose, okay? Because it eliminates a little bit of the bias of stocks only go up, because we're actually seeing if we can chart it so it goes down, which is kind of counterintuitive maybe to some folks. But I'm like, well, if it fits. So what we had done is divided this into sections that we thought were really important. Based on the waves. Now I'm not seeing that section, but I guess I didn't turn it back on, because one of them was here and the other one should have been over here somewhere. But this is like the quarter system. Man. It's like back and forth, dude. So yes, I bought 350 calls. You don't need to do what I do, okay? But the confirmation here is probably up above when it breaks the ice way up here. But I don't know what it is about this. I'm really feeling it. So I'm gonna get it. And I think the market doesn't know what it wants to do yet, but I think it's missing this move. It just doesn't make any sense. Even if it dropped here, I'd be like, well, where is the move, you know? Like there was never any push of the highs again. It'd be kind of odd. So even if it dropped down to like 530, I'd still be like, well, maybe it could just spring out, because I could just be a wave cross here on the bigger picture. Technically, it's already checked it once. You could check it again and then go. I'm thinking the whole market's going to do that. Maybe a down and then an upward motion. I don't know why. I think AMC might really reap the benefits from this one. Anywho, so when I look at GME, I've got to find that marker. Just focus, dude. Just focus, man. You're like a squirrel. I know, sometimes. Sometimes I am. It would be a vertical line, probably. Not that one. Probably not that one. That might matter later, but we're not there yet. Wait, what was that one? Oh, that's the termination point. We need those.
Sorry, I don't know that one.
Yeah, nobody asked you, robot. Why don't you go hang out with your AI buddies? Jeez, Boxy. Booksy's anti-robot. They're going to come for me one day. In 2025, you spoke against AI. This type of speech is not allowed. Oh no, it's not here. Why does your robot sound like a typical robot? Why wouldn't he just sound like a person? Probably sound like a replicant from Blade Runner. Just like a normal person. But talking poetically. Yeah, I'm a little lost because I'm pretty sure I had a bunch of boxes drawn for it, but maybe I plopped it in the other group on accident. I don't know. I probably could just eyeball it anyways. So we were saying this is the likely intersection. Maybe it's already on, and that's all there is to it. I just thought there were more than one marker there. But I'm curious as to this part. So in the S-curve, this actually builds up first and then down second. So if you look at the timing of it, based on the way this started, the downward portion, which is looking upward on this chart, the downward portion actually starts after, of course, the upward portion, which is like near the break zone here, right in the beginning. Well, the measurement then from a middle would then be wider, so it takes longer to come across and go to the top, the highs, right? So I had done this measurement previously. It measures out to February 2026, just like AMC. And you're like, what? That's crazy, man. Yeah, it is crazy. But the downward portion is also really crazy because technically that starts a little bit later. Oddly, that actually goes to October 2025. So the question is, could both be true? Is that possible? And I'm kind of seeing that the answer is sort of self-evident. And the answer is, yeah, both could totally be true. If this were to go up again, okay, how would it get there? Right? How would it get to this point? I think this is the kind of the most interesting thing that we could sort of address right at the moment because, oh no, AMC's going down, guys. Oh no. Go down. I was at 288. I thought it was like way down. I thought it was like dropping like a fly. I wanted to see if it goes down to that 282 level. How would you read this in the upside down land? And you can, it's not necessarily rhetorical. Only robots made in the UK. I just got here. What's stock? We're looking at GME upside down. Because I'm weird like that. So let's say you saw this in the upside down land. Talking about Stranger Things? No. Let's say you saw this. Shut up, Bugsy. Just get to the point. In upside down land. You would say this is like a breakdown, and it's currently resisting this $21 level, right? I think all of us would agree. But if you look at this from the point of view of like an M cross, then it's like, oh, well, we jumped over a creek here. We didn't ever retest it. This is where the theory came that I had that this could actually run up to like $50 or $40 before it actually goes back the other way. Because in reality, if you look at this in the upside down land, right, if this didn't hold here, this makes perfect sense because this would be like an M with like an SOW. Because again, this had like a breakdown on that trend, which seems to have already happened. This is why I like doing stuff upside down because it kind of takes out the oh, it's going up kind of bias, right? Like, oh, it's going to always just go to the upside, Booksy. This looks like an SOW of sorts, right? Because you can see the early move here, that big pump that happened, dropped that trend. So if we're looking at it upside down as if we're bears, we're kind of nervous because we're like, oh, well, it dumped the trend that was holding, which would be, we would call it like our ice, right? So it's like, that's not good. It did. It popped above it right there. Or in a bear case, it popped below it. Normally, almost immediately, I'd be like, yeah, that's kind of bad, right? If we were looking at this the other way, we'd be like, crap, dude, that's weak. That's some weakness. And we would say that this was the previous drop, and it looks like it's going to go back to here, which is $30, on GME. Kind of falls in line with this idea that we might get some nice little squeeze motion. Now, what about going all the way to 40 bucks? See, that's completely different. Yes and no. When you look at the big picture again, it's really important to kind of note like where are the anchors here? Like what's really being used as support, and where are those supports kind of being left in the dust? Because they're not all being met. Some of them are being met and some are kind of passing through. This one's very curious. This is a weekly chart. And this one's very curious on January 21st. I think this one's really interesting because it didn't quite hit on the big macro picture. It didn't quite hit that marker. It went a little bit below it and then it comes above and it never touches it. So I think that's an interesting marker. This one being the one outstanding. This is very, very, very low. And then there's a huge candle between these two. Almost like we didn't really want to trade it very much. So this is kind of a weird no-fly zone right now. There could be some serious price movement between these two areas. So we're going to keep that in mind as well. We've got a lot of little horizontals here that would signify a top. This also rings true of what we're looking at on the big picture because we're like, well, if we just had an SOW, it does seem like you'd want to come down and try to get to those levels. Well, sure. And indeed, we do have some evidence that there was weakness here. So it would make sense that they could come down to hit $30 by the 28th. That's kind of easy enough to see that. That triangulation is pretty straightforward. But that's sort of slow. Another thing would be like a 50-50 because if this ends up being a breakdown, a lot of times I'll look at that as like a midpoint. And then it's like, does the top add up? Well, sure it does, because this is bottom to top of the range. We're kind of sitting on the 50% marker of the range anyways. So surely that also makes some sense. This goes way back as well to the beginning of this whole trend, right? The beginning of the whole thing. I said trend, but hopefully you know what I meant. So there's a lot going on between these 2 points. So on the big picture, if I were looking at this and I said that, hey, I think that this could be an M, well, either this M is going to break the other way and it's not done yet, and we're going to see it squeeze back to 17, which is true, it's possible, in which case this is just an early sign of weakness and we're not actually going to fulfill it until much later. You could make the argument that I think it's going to go this way, break out here. It'd have to break out, right? So this would be like an inverted SOS. It's going to go to 1750 or whatever it is. And then it's just like a big pointy ear. And then somehow, I'm not really sure how you would do this, but I guess somehow at that point, it's going to then just kind of slide the other way really far. So this is one option of possibility. I think it's a very real possibility. There's a lot of similarities to what we see at the top here, right? In some ways. I mean, they're not exactly the same, but similarities, okay? Where this jumps over some final creeks and then it kind of ricochets the other way and goes really far. And I think this would be a good potential reason to have a massive buy-in, especially around earnings if it ends up being on earnings, right? So certainly that's a possibility. This also is a very AMC-like setup. So this would be a setup that goes south first. Maybe again, it has a little pop here, but then it goes south first and ultimately ends up being low before it's much higher, right? So this is kind of like a double sign of weakness, and then it goes the other way. Goes all the way to 17, and then it reverses and comes all the way back down. And you probably get a slingshot around the blue line at that point, which could lead you up quite high to $50 or something like that. So that's certainly one. That could be like a June squeeze. All right. Another, if I were looking at this, would be that this is the first M, and it's not quite done yet, which is quite inverted. If you look at this from that picture, from that point of view, it's almost the opposite, because you're going to go down in this case. You've made some, I'm not sure where you'd go exactly. I guess you'd go to here. So you'd go to here. It's kind of the reverse. It really is. And then you'd go the other way, because you'd cross back up. And that would end up being like the middle. So this would be M1, 2, and then you'd have a 1, 2 the other way, which would be pretty ugly. You guys are like, what? I mean, it would be ugly, because I'd be looking backwards at these trajectories that were not met. I kind of want to go to down first, if that's the case. Like, I'd rather just do the downside and get it over with. So that to me looks a lot more stomachable. So weirdly enough, both of those still have like an M1, M2, but they don't necessarily have anything else. So what this does is it allows you to have a squeeze that kind of comes back up. But my fear about that is that it's really just a repetition of these other two. So we talked about them as iterations, like boom, boom. My fear about that is that it's really just the same thing we've already experienced. It goes to 17 and then it rips to the upside, but it probably doesn't take off. And ultimately, what this becomes is kind of another iteration. Like, this is the one, the first one's the big one, right? We already did that one, 2, and then 3. So logically, we might garner like a build out here that goes up to like 30 and then fall back all the way to 17. If AMC's also going backwards there, that would make sense. And then you end up from 1740 all the way up to like 50 bucks. But unfortunately, what that means is that iteration is now like done. And this is indeed the middle of the cat ear. And then we have to do it again. So this is where things get really dicey, because the cat ears themselves, strangely enough, they are shrinking. I wonder how I did that, because it must have been... Oh, I see. That was the window. So it was ear 1, ear 2, which I had that one on the chart. So ear 1, ear 2, and that's where they were. So ear 1, ear 2 on the next one, it's already there. That's kind of cool, actually. So ear 1, ear 2 on the next one. Wait, is it the same? What? It's the same. Oh, that's weird. It is compressing into the same point. Shoot. They're really compressed here. It's like basically the same week window. I can't quite get it right on this time frame because it's like slightly off. The vertical bars, I mean. Like they want to like be perfect for some reason. I don't like that. But I guess it's because it's somewhere in the middle of the weeks. So I'm just going to favor... I'll just put them on the left side. So this is red, and then this is green. All right, well that follows. So this is the smallest of the iterations. So if you're having, yeah. Now I'm starting to think that we might be right about this reversal, because it almost makes more sense than just going up and reversing here. Why not? Why? Because you get like a pop here, but then it would drop really low. It would go back to 17. So I do think there'd be a likely pop here because the SOW is already in play, but it's not going to go all the way there. Instead, it goes backwards and it has like a reversal rally. Breaks out, but it doesn't go all the way this way, which is kind of ridiculous, but it would go basically back to 17. So this is just to garner like seller support, just like we were talking about AMC, that pop garnering seller support. And then we head back down to 17 before earnings in May, and then there's a squeeze, but the squeeze doesn't go necessarily like infinitely far or something. I mean, it's probable that there's a decent squeeze here going into June 9th. Very probable. But I think that it's going to go down to 17 and then do it. I think that's the iteration. And then weirdly enough, I think it's going to float here. So we had these float levels previously walking back around the same portion. So why would this one be any different? Like, where is that going to be? Why is it where it is? We just did this, Booksy. Well, on the one hand, we hypothesized it is where it is because it's going back to that middle zone where the ear cross happened, which does make sense because it did do that here as well. Went back into that, and then this one goes back into that. So where the heck is the ear cross here? I don't know. Right here, maybe? As it's not working from the bottom very well. Well, I mean, it's because it's not steep. That's why it doesn't look right. It feels like it should be steeper. Like if this line were here, I would probably be a lot more inclined to be like, yep, that's it. It just doesn't look quite the same because it's not as steep, but it is actually really high up. It is this marker. So the reason it looks different is because it's flat. It's not as steep as the other one. Just isn't. So that's probably it right there. Yeah, it's just not as steep. That's all there is to it. But that does explain that little gap right there. If it's that lower one. So what this does is it goes really far, maybe up to like near 45 or 50. And then I think it's going to go to like 40, like on the dot. I don't know. It could go farther, but I'm going to say 40 to 45, which were previous targets that we had for bigger push-up for GME. So we know that that was already on the docket. Why can't it just melt up then? It could, but looking at where this middle is and looking at where that intersection is, now that triangulation makes a lot more sense right here. Suddenly this becomes like a really, really obvious hot zone for the cat ears to happen again. So then there's a big drop fallout, just like there was previously. There's a big sell-off. I don't know exactly how far it goes, but there's a big sell-off. I think we need to see a change of character here. I'm not exactly sure what that's going to look like, but if it flattens out again, it may be that the first sell-off is actually lower. You know, it's kind of reversed because usually this one's been going above, and then you have to back up to it later. It could be that it's actually not. It doesn't actually do that this time. So then it develops ear one, And they're really close together this time, year 2 in July. You know, it's interesting because I think on AMC, when we looked at the big picture build out, we had talked about maybe this having a build out that goes into July instead. And I had mentioned that there was a possibility that this is going to be kind of bullish for a moment and then it dumps down into July, which I thought was very strange because everybody was talking about this potential squeeze moment that happens in June. And it's like, well, yeah, but if you get a buy up here, what kind of squeeze could possibly happen in June? It doesn't really make sense, kind of backwards. It's like that's sort of the opposite. This looks like it's still going down in June, but it'd be like an early bottom maybe, depending on how we get there. So I was thinking about that, and I was like, you know, this guy leaves July 1st, and it just bleeds up. But that's what happened to some degree with GME. Remember, it took off early, it never came back. And when it did finally go, it was like already in a breakout mode, and AMC was really low. So AMC's first melt up only goes halfway. GME is already like going like the whole way, but it had already been in like the breakout. So what might happen is that and that makes some sense because we talked about AMC having like 2 parts again. So then what? Well, from here forward, it's kind of the same deal. It's like you might have an attempt to go the other way, but if it holds, something's got to give. You can't just keep compressing forever. I can't believe I'm doing this, but I'm going to do another division here because it's really tight and it almost seems pointless. I believe that the divisions are going to keep going. It'll be interesting to me to see what happens if this occurs, to see what happens with these accelerations, because if they're starting to accelerate rapidly to the upside, that could be the squeeze target. We're just not there yet. I think we've already got in mind where it would be. But yeah, this would be like a head fake that just kind of fails to go. It'd have to fail if it's going to continue up. But it would be here. Why is it so far? No. Booksy. Did that wrong. Now they're the same. So on the final iteration, they're the same. There's no more space. So the compression is evident because each of these is now, remember, they're not even compressing into the same spots. They're compressing into different spots. But this is it. This is like as far as it goes. Yeah. Then the final compression is division. So this is also like a green line compression. For the sake of our brains, I'm going to put it just to the side, but it's the same spot as the end of that. So now there's nothing left. Like there's no longer any red. Red's gone. So if this ends badly, that's where I'm wondering, like, there could be like kind of an inverted squeeze of sorts this direction. Because if it ends kind of poorly and it fails to make an advancement, carrier 2, this is going to be like rapid fire. It's too slow. It's way too slow. It's inverted now. Because now the ears are flip-flopped. They were getting really close together, closer and closer every time, which makes sense. But these are like wider sections, narrower, and then narrowest. But this actually inverts it. Because there's no longer because the compression doesn't go to the same point, the division then breaks down. And this is now, weirdly enough, this is now ear 2. And this is ear 1. It's flip-flopped. I don't even know how my brain would understand that. Maybe ear 2 being the distribution ear and ear 1 being the buy-in ear may explain some things. But you flip them. It looks like September to November would be really dangerous. So, yeah, there's definitely a couple possibilities here. I don't know. I don't know what to. I guess it had to just break out. It's that simple. So, if it goes the other way, you'd see like another compression, but it'd be like on top of this mark, and then it would dump really hard. And it may seem ridiculous, but that actually finishes the first major compression wave. But then it just flips in October, November, and then it just goes all the way up. So it goes from like 6 all the way up to like 200. It looks weird, but it kind of looks right too, because it'd have to go back up and reject off of here and turn into like a distributive function. This gives you a January squeeze. So there is a June squeeze and there is a January squeeze, but they're not straight up. Like the last ones were like, felt like they were all kind of up, 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 up. This one instead is like a massive backup. And then a huge, 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 huge squeeze motion. I hate to say that because I think from a technical standpoint, that may not make people feel very good. Or from a fundamental standpoint, that may not make people feel very good. It may not make a lot of sense to people. Like, why would that happen? I'm not sure. The only other thing I can say is that if the build out does work out in our favor, it would be like a series of LSPYs that are kind of like what we're talking about here, where you might get like subsequent breakdowns. We're talking about the micro over here. You might get subsequent breakdowns that still appear to be kind of flip-flopped, right? The main issue is that I think that's actually kind of bad. The way this is chopping, it could go either way. It's kind of going sideways. There's no indication at this point. It looks like it's targeting 26. There's no real indication at this point that it's rising or falling. I would suggest to you it's probably rising, which then usually leads to a fall, since this is upside down. Part of me actually thinks it's better to do that because you're going to get a really big move. And it's a more realistic move because it does reset the iterations correctly. I think if you just bleed up, I don't think it's going to necessarily make new all-time highs. So if it's not like the previous one, then GME's next squeeze would be kind of crappy, because if it only goes, let's say it only goes in June and it just starts building out, and maybe I'm wrong, maybe it never comes back to 17, but it builds out up to 40 and then it just squeezes. And I think I've talked about this potentially before, because I said, well, kind of what happened in 2020. It didn't really go back down again, just kind of built out, and then it's finally just squeezed. You might think that that's really bullish, but in reality, there's not really much precedent to go beyond this creek right here at like 121. So it's sort of in the eye of the beholder, I guess. It's a subjective opinion about what you think would be better. I think that's a pretty extreme drop too, like from this perspective is what I'm trying to say, not from like, I mean, it's a big run up, but it would be like a really extreme drop. It would be really hard for me to see that happening. And then backing up, you'd have to kind of hold 30 or 40 bucks, and then maybe you could go up again. That's kind of the only maybe possibility here. So something like that. But the iterations are such that they're not ready to stop yet. So I don't know why you would do this and just kind of ignore them. And if you send to the upside, then it's really hard for me to kind of see the rest being particularly bullish. So I'm not saying no. I'm not saying no to the possibility that it goes all the way up no matter what. But what I am saying is that unless it kind of adopts like the AMC model of like pump, drop, reaccumulate, pump again, I don't think it goes beyond all-time highs. I think if it does, it just like barely gets there if they do it now. Because you've avoided this for a really long time, this directional input. I would be very nervous that it would just dump from like all-time highs back down to like 6 if it goes there. So that's actually fairly unbiased, because I'm trying my best to like avoid flip it back over, and this looks like a flippin' cat ear, doesn't it? Like that's expanding and then has a decision moment. And yeah, you can definitely see why that could be like a 1, 2, 3, 4 that crosses over, or is a distribution. It sells off here and then sells off one more time, and then it just dumps. Everything's in the right place. Weird when you flip it back around how right that like kind of looks like what you would expect from a cat ear. If anything, I might be a little off in terms of timing, but yeah, that builds out really well. Yep. So this has to be like an SOW if that's the case. It looks really, really, really close to what we see in cat ears that are distributive. I don't think this is particularly new though. I mean, I'm just trying to make sure I get the idea down. Yeah, I mean, that looks correct. Distribution and then distribute here off this line. It's where everything should be. And then you'd have a breakdown. Weakness right here, weakness right here. This is the same exact thing that happens here. It's like an identical setup, but it's just iterating again. Because if this goes up, then look at the build out here. This is like the same model essentially for this like walk down. Because then it's like cat ears that rip down. This flattens out cat ears that then rip down and go. So this is like a 1, 2 with a little pop, drop, go. And then this is also like a 1, 2 with a little pop, drop, go. We did a good job. And then it does it again. a 1, 2, and then there's like a pop. I didn't include the pop and the drop here, but pop and drop. Sound like a rap artist. Yeah, but it'd be like here. You'd have like one more. And there's your 4 top. 1, 2, 3, 4. It'd be 4 this way too. Pretty distinct. So the iterations actually work really, really well here. Like they're super strong. Yeah, man. So September to December might be super ugly for GME. Like really ugly. SLS. Oh, we got the whole day, but I could go check them out. I mean, I'm probably going to take a lunch break. Yeah, so this is kind of the build out that I guess more people are expecting because of the nature of what GME has done in the past. It might be a little more in line with its behavior pattern to some degree. Like there's no cat ears really to look at that are like this, unless you look at AMC. Then it looks really obvious. Like, oh yeah, that's it right there. And it actually just looks like a giant spring to me. It doesn't look particularly bad. It just looks like a terminal shakeout because it goes back beneath that floor and then it rips. I kind of think that's it. I don't think there's much else to it. One of the two. It may not look perfect, 100%, but this is pretty darn close anyways to the other S curve that we had. And I didn't bring that one back, but it's there somewhere. I don't know. We could try to find it, but I feel like I'm going to waste a lot of time looking for it. I already did this. So maybe it's over here, like lower. That was the upward one. See, this is the one that didn't finish, and this is the downward one. And then I was like, oh, I don't know what to do with that. So let me change this color to red. So you're using like red and blue. Oh, that didn't work. But that's okay. This is nice though. I mean, either way, what sucks, the only thing that really kind of stinks about this is like that push up to 40, not knowing if it's going to make it. That's the only thing I can think that might be kind of maybe unsettling is the right word. But otherwise, there's nothing really very scary about this. If it goes down and it hits 17, it's probably going to squeeze to like 40. And that's a big move. That's 130%. So it's a huge money-making opportunity. And if it doesn't, and you just have shares and you're good and content here, you probably don't care either way. So the only piece that's missing here, and that doesn't seem quite right, is the timing on this. Doesn't seem quite right. And I don't know why, but it looks off. Like I would have expected this one to be where it is because I don't know. So why is it off? Because, I mean, really, this has been very, very good. This has worked extremely well. There's that creek. So what is off then? Gosh, the timing of this is great too. It's down to like May. Everything about that just kind of fits like a glove. But this blue one, which is your upside one, does not fit like a glove. I don't know why. It makes it look like it would be terminating Unless I just didn't use it because I didn't have it. That's possible. But I thought I had this. I think I did it right when we pushed up here. So I may not have used the right marker. I think it's this guy in the middle. It should be wherever this mid cross is. I'm looking at RSI. You can see the lower portion of the wave goes across this bottom area. I'm trying to determine where that creek jump is. Actually, it's like way over here. It doesn't jump the creek until... It doesn't jump the creek till March 14th, which is very similar to the setup we have here. But that's the downward creek. I want to know when it jumped the upward creek. I'm just doing the same thing. I just did it in the wrong way. Is it because of this? Is this time all spent building that up? Man, it's really darn close. It's very, very close. If you actually go from where it broke out, which is October 29th, the RSI is kind of building out on that marker, but it breaks out on the 29th. If you look at the breakdown, it's exactly where it should have been at that time, as it did the full rotation. So that is a full S-curve rotation. That's a full wrap back to that marker. So what remains is this gunk. So the first one just doesn't go anywhere. I mean, it's kind of unfortunate, but it's probably because it broke down here, so it wraps up to the top there, which is sort of strange. Like it never gets to the high. I don't think I ever would have pulled that line on my own. I mean, I just did it, but like in advance, I don't think I would have done that. It goes to this peak, and that's where the breakout is. There's nothing like wrong about it. It's where it jumps the creek, but what are you saying? I'm saying it may be that is the intersection right here. It is going to go up high, but it may only go up to like 32. We had talked about 32 previously. That kept coming up. So we were thinking that the wave went higher because of the steepness of this line. The wave may only go to like 32. That actually looks more correct anyways. As soon as I fix that, it like kind of falls into place. Of course it does. So it's a slower slope. So this goes to like 32 and then it breaks down. So in this case, the green terminates before, which, I mean, the blue terminates before. So the blue being like the bullish marker, which explains why, again, this is like the middle of the ears, because you would have like multiple crosses here that are attempting. But I think it's going to fail. I hate to be that guy, but I think it is. And I think what's going on is they're doing like a drop 50-50 through here. So the 50% marker is right at 23.89, which is that floor. So just establishing like a widening here. And notice that the widening is like 1, 2, 3, and then it comes down. This would be like 4. I think it does it twice, and then it comes up again really high. And that's the last one. That's the big one. It's possible it just doesn't go. Like it doesn't even make it to 32. That's not impossible. But I'm looking like market wide. I'm thinking like the market on the whole, man, I really hope I'm not wrong about this, because if I'm wrong, it's just going to go down and it's just over, you know. But I really think that the market on the whole is missing that last move. It just doesn't have it. It doesn't quite get to where it needs to get to. There's no other top. Why am I so convinced of this? Is it just because you were bullish and now you're not happy that it's not going the way you want it to go? Or is it because there's genuinely something there? So you need to be honest with yourself. I legitimately think there's something there that's missing. What I can't predict is how far the sellers try to take it down right now. And I think that's a bit difficult. So interesting. It certainly looks like a rejection. It's definitely like a top right here. It looks like a kitty cat ear. No doubt about it. But kitty cat ears are not always bearish, as many people might assume. I think the reason they didn't go over the top, I'm just going to say it. I think the reason they didn't go over the top is because this is like I think it's a buyback in. And I'm not going to be able to like prove it without a shadow of a doubt, but I think what this is an early attempt to advance, and then we're going backwards for liquidity, and then we're going to rock it one more time. The reason I say one more time is I think we're on the outside of the trend, and that usually happens when it's like kind of finding its resting place. Doesn't typically go like way beyond that trend again. There's a lot of ways to interpret it, but let's use this bottom and the breakout bottom. I think that's the best one. So I think what happens here is that S&P 500 backs up. I wish I could find that spot. How can I find it? It looks super bearish, guys, but I think that's important. I think that's a part of this. I really do. Yeah, I don't know. I'm not really seeing like the volume that usually accompanies distribution. Like the simplest answer is it might come down to this creek down here and come back to like 530, but I don't know, it feels really low to me. So, and I said I didn't really want it too low, but that could be fine because in theory, this is already like advanced. So the other thing I'd look at maybe is this guy. I don't think it's going to come below 532. So this should have been an attempt to back up. There's two creeks that need to be messed with. One at the very, 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 very top. The market didn't really check it. It kind of did a wick through it, closed beneath it here. And then we came back up. It's the same thing. It kind of like wicks above it and it closed beneath it. And it didn't even like check it at all. This backup doesn't quite come low enough to test it. Weirdly though, this is also not a bearish backup. It doesn't come below that marker. So it's a decent backup, but it's not great. See that? The missing it. It's just kind of missing it. But I think in theory, because this was up higher and it pressed it like 3 times, it may be possible at this point that this is partially raised already. This section right here, it did check those, and that's what I'm trying to say. Like, it's not that it didn't check anything. It actually came right back on top of those guys. So it's possible that even though this was like used as a resistance, when it made those 3 wicks, that's all that really needed to be tested. And this is probably being left open as a bit of a bear diversion. That like, oh, we didn't ever come back there. Even though I know most people aren't looking at those things like I do, but I'm thinking like that might be why we're getting some low targets. I think the next one is this guy. And when it was taken out, you can see that there's 2 hits. One is this first backup here, and then the second is this jump across the creek. And I'm guessing if we look on the smaller time frame, we're going to see some information there that's pretty interesting. We do. Yep, right there. Yep, so look at that. See that test right there? Look at that M cross. Look at where it landed. It's right on the money. Boom, hits it like perfectly. So we have to check that one. Maybe, maybe not. But that's about as far as I think you'd have to go here. And actually, we'd be looking at others now because I think we're in a good spot. So I think the market's about to surprise a lot of people because it looks kind of dead right now. I think it's going to have a pretty big movement soon. Really? Yeah. Because the bulls are doing a pretty good job of back testing, and that only really happens when you're in a pretty decent setup. You know what I mean? Like where it's like, oh, it's pretty bullish. I mean, if they're not back testing things, it's bad. If they're at least locally back testing, I think it's good. And some of these volume sell-offs are not, like this is a bizarre one, but it's a lot of it's tied to the bottoms here, not the tops. These bottoms are where you're seeing a lot of that volume, not the tops. The peaks would be like here, and there's nothing there. This is bullish. And I think this is bullish. And I think it's about to rip. Really, Booksy? You doing that again? Yeah, I'm doing it again. Look, I know we didn't get the follow through that we wanted to get. I'm aware of that. I know there's some issues here, right? I get it. It's not perfect. Technicals are just technicals. I know there was a death cross on SPY. I'm aware of that. Somebody else mentioned that sometimes those are tested. I don't know about that, but like they go back up to the point where that death cross happened. But I think what we're going to see is that this is going to be triangulated as a top. Yeah. I think it's very similar in some ways to what we just looked at AMC. I think the small caps are going to get a bigger move this time. But, I mean, who knows? This is one of those I don't really care kind of moments. Where's it going to go? Well, like I said, technically this could still come down to like 532. It may or may not. But I think what we need to look at instead is watch for that breakout locally and then see if it fans up. It has to come above the what we call the ice levels, which are those rising trends. And there's quite a few of them here. So I did one. Maybe I should make the ice like cold. Like blue. Why not? Let's just go. Let's just take that analogy and just go with it. Make it theatrical. So there's 2 ice levels here that are really, I think, very important. Maybe 3 if you count the middle one. That's probably like the center mark on that fan too. Totally is. It's like right in between the 2. That's crazy. So those all have to be broken going back out. But that region, it could be that that's where we end up later. I mean, we could end up there tomorrow for all we know. Still go to 550, but do it up there. But for now, I'm just kind of watching. I think this is the more important level. I know I have redrawn it a couple times, but that's because I keep changing time frames. And you know how it is on these charts. If you change time frames, your lines get all janky because you're drawing them to wicks. If you're snapping them to wicks, then it's going to look different. And then this guy actually kind of looks like it's built out a little bit more. And then a little bit more. So it's just kind of defining it like over and over and over again. And then look at that reaction here, 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 here. It's really, really nice. We're going to use even closer. We're going to define it even more. That's the one. I think that's where the target finishes. So wherever it finishes, if it pops now and it goes to 555, pops later, maybe it goes to 565. I think that's where it's going to finish that motion. Pops way later, I guess it could go up to 570, but it doesn't seem very likely. What would make more sense to me would be to just kind of come back and revisit the floor. $552 maybe. I think they're going to camp right there. I guess it doesn't really make any difference, but what else do we have? So this did not cross up, said it went down. So it needs to have some kind of an LPS or a spring. And then if it can do that, it should generate. I wish I had the ability to I guess that's what groups are for on here, so you can flip between them. But I think there's going to be intersections here. I just don't know exactly where they're going to be. So I'm kind of eyeballing it. But that would be a solid one because that could be a peak with a backup to this. It intersects another trend. So sure. But there's another one higher. It should be a bunch of intersections. I wonder if this ends up still being a 50-50 climb out. It's just slow. Can't be 50-50. Oh, that works. Take it back. That works very well. Because it's right off this jump. It goes up to 565 or 561. So the 50%'s at 534, which is right there. It's hard to deny that's important. If it's much, much lower, I guess it could be as low as that, especially if it has a spring. If it ends up going down to 531, then we might think 556 is more likely, which looks like that other one. It's a little closer. Either way, works pretty well. Bounce, bounce. It's rotational. It might take a little longer than expected, but it's rotational. I think it's going to go back. Yep, Wednesday. It's just slower than expected. Right there, it's the same marker. This halfway point, it's intersecting at 531. It's going to go into Wednesday 16th. It doesn't mean it can't be up before then. I'm just telling you that's a really important marker. Could be up there by that point, but usually that's a pretty good sign. Because what we're doing is we're doing an S-curve to the upside. We're measuring 50-50 here. It's matching out the timing of the rotation, which technically goes back farther, which is here to here, which is rotating around. It's the full time it takes to get up, down, and around, usually about the same. And then if you look at the rotational symmetry as a potential for a reversal, I don't think it then has to be, it's not particularly useful to do something like this in this case, because I think we've already established that this is like a massive move that's pretty unusual. So I don't think it'd be highly productive to do that, but we could still look at it and say, well, it broke out like here. That's roughly the length of the move minus like the dip in the beginning. That's where the breakout is. You could look at something like that and place it up here and see if it fits. And it fits. So again, what I did is I took that move, kind of estimated based on like the height of it. And I guess there's an extension even. So going from this like purple zone up to the blue zone, that was like the height of the move. The rest of it, I mean, there's a little dip below and a little dip above. You can see those are probably about equal parts. Usually that's about the case. Yeah, they're the same. So that's kind of like extra. Those are like spring motion, up thrust motion. You see how that's tacked on? But the move itself is really just this range move from here to here. And if you built out, then you would expect something kind of similar on a rotation. So if it drops down to, and I don't know if it really matters if it drops all the way down. I still think that's kind of the middle. It's like that 230 or 530 area. It almost doesn't make any difference. Then you would take that and look at where that is. It does lead you to 569. At least, yeah, and then look at the cross here. Well, there's no guarantees in the market, and certainly like it's possible that this could not go the way I think it's going to go. But I'm telling you, that looks really pretty darn solid. That movement here is the same motion. Weirdly enough, also these guys put themselves in the right in the middle, these projections, and that'd be a great place to have like a cat ear S-curve middle. You see that? Like everything is where it should be. It's essentially like a technically perfect setup, as I call it. I've seen these before and they did not work. So I don't know. There'd be something in the morning. There'd have to be. But it is a technically perfect setup. Like it's got everything you need for that move to happen. I mean, it's a lot higher than I would have expected it to at this point. So I think it's pretty likely. After that time, I think we'll come back down to like 550. And we're going to have to deal with this bigger creek probably. And I think we already talked about that to some degree. I don't want to go into that again. There was like a chance that we could push the creek but not jump it, but then you'd have to come back down and like mess with it. So I think that's what's likely going to happen here. That's this outer one. Yeah, like drops beneath it. It could be a little slower than that. I don't know why I have it going down like super fast. It's a similar motion as this, but it sets up low, like lower. Yep. I don't know what it's going to be. It's tomorrow. Is this what you're going to do now, Buxy? You're going to make these big call outs and then pretend like the news is going to happen and then it just happens. I don't know. Aren't you pushing your luck, man? Maybe. Maybe. I might be pushing my luck. Yes, it's very possible I'm pushing my luck. Yeah, so this is a pretty huge assumption. I mean, in reality, yeah, could there be a breakdown that doesn't quite work that way, sure. I mean, if the week's going to end green, it's not like this move would be particularly heavy green for the week. If you look at where Monday was, Monday opened up pretty high, and it had a gap, but we've already filled that gap. If you look at the close value from where it opened, roughly around, let's just say 542 to 553, it's not a huge big green week. It's like a week that has like a body that's green, but it's ultimately like, you can see where this is. This may end up being at like 552 or 553 by the end of the week over here somewhere. So largely may not even be that. It could even be back down to kind of where it was. This could be a very indifferent week where you have like one massive move ahead of time, so on and so forth. I mean, I know I'm giving out a lot of credit here, saying this is definitely going to happen. I'm not positive that it's going to go all the way up there. We also know that there's been possibilities at times for things to happen and then they don't fulfill. So the one way I could see that happening is it kind of stops off at 555. I still think this is kind of a problem zone, and I would be very concerned about breaking that if we get up there. So don't take this as like a guarantee at all. I'm just seeing it as likely. And that actually matches pretty well the first squeeze, which went from a pretty low spot, ripped up through the gap level, and then dropped back down. This would be, again, fairly low compared to the gap, ripping up through the gap level, right, a little bit past 566, and then coming back down. So it's like a second squeeze, and it's a massive cat ear, like pump one, and then an M cross, right here, an S curve, rotation, and then pump two. So it's like a big one and then an M cross two. And then a number of things could happen from there, which is a good place to be if you're just trying to keep it kind of steady around the 550s. Doesn't really change much. And then the week of the 21st was a longer weekend. Then you have a new week, and you could probably go mostly sideways for the first half of the week. It gives you a whole nother week on this range that we're in right now. So it may seem like a really, really bullish setup, but it's kind of just one day, and then the rest of the week is pretty flat / up. It looks like a decent recovery week that has some uncertainty on the top. I don't know, Booksy. It looks like it just dropped, man. Just drop, go down. Yeah, I mean, there's a very real possibility it just drops and keeps going down. You can't know the future all the time, But do I think that it's going to drop and just keep going down? Probably not. I don't. I'm not worried, though. I'm going to just say that. Like, I genuinely think this is correct. And I also think that that's probably it. I've got it going higher, but I'm kind of thinking that may not, I don't know, that may not happen. And even if it did, I would be like, probably already turning down because this is already widening out. So that'd be like the last one. So wherever this makes a low right now is going to be like a final, we'll call it like a fan, right? But it'll be like another fan. And I think that you would have a possibility that happens like way out here, that it could come up again. But I think that would probably be the last thing, because you're going to have another SOW here
that sort of shows that it's not going to be strong, and that would probably point low, and then you come up high. So if that's the way this goes, I would not expect there to be an S-curve necessarily. We'll have to see. I guess it depends on what happens here. That is the S-curve build out, though. I don't know. It's tricky, man. Tricky, man. What else could we do to kind of prove that this might happen tomorrow? The M cross is there. It's on the 1, 2, 3, and then 4. It's on the price action, or it's on the RSI. That's a 6-minute RSI. It's not exactly the end-all be-all. But, you know, if you were wondering, like, what do you mean by rotation? It doesn't look like it's rotating. This is what I mean. This is the M. Jump the creek. Could come back down and test the same creek and still be above it. So, I don't know. It looks pretty good to me. It looks fine. This could be bad, I guess, if it stopped there. But it's no different where you're looking at this having to come up and over. Gosh. Sorry. Sometimes, you know, sometimes I feel really confident, and then sometimes I feel like a delusional quack. And I don't know why, what the difference is, but I feel really confident about this, and that makes me kind of worried. Makes me really nervous. What I might do is roll some of my options over, because I think that we got a good setup here, but I'm not convinced that the options are going to recover, because the way that they've been going, it's been kind of garbage, especially on Tesla. It's been kind of trash. Proportionally, if this were to go into an S-curve, I don't know what happens with Tesla. We were really bearish on it earlier. Proportionally, this goes back April 2nd. We're already there. So it's like, it's already happened. That's again, it's like we've already kind of come back up to April 2nd. It's really strange. So it is a very similar idea. I think we were right in our assumption or idea is that we may see a pop here that goes up to like 286 and then fakes out and heads back down. We were talking about that earlier. And I said, well, you know, it could go up higher and kind of fake out the market. And I think that's a possibility. It just broadens this wedge some. And then if you look at the overall picture, it's very similar. It's a little further over Wednesday. Drops back beneath, and then we would know by this point, because this is where you'd have like a fake break or a breakdown. If you break down, something like that. So if it's similar on Tesla, it'd probably walk down in a very similar way. I don't think any of these levels would hold particularly well Thursday into Friday. Monday, yeah, and you're back to like where you were here, this kind of stuff. Timing's always a hard thing to do in the market. I don't really worry too much about the lines unless I'm saying I think the timing goes with it. In this case, I don't think it really matters that much. So sell down would have to be pretty fast if it goes all the way down by earnings. Maybe earnings is like bad, and it's a downward catalyst at first, and it dumps, and then it recovers. Actually, this follows pretty well because it would need to jump back up over this anyways. We're just kind of tightening it up. So it's debatable. Tesla's a bit more shaky, I think, unfortunately. Just having trouble understanding why this would even go back up. Like, why bother? I know it's very possible it does. I'm just trying to understand, like, what other reason would there be? This is equidistant from that low here to the 308, 309 level where we are right now. So it's the same distance that you see here in the build out. Yeah, that works pretty well. Monday, not Friday. Yeah. All right. Well, let's take a look at some of these other ones that I was asked to look at. I'm feeling pretty good about this right now, but we'll see. See how it goes. I am very bullish on it. I know. But I'm not feeling very confident about trading it. I'll tell you that. Because the way these things have been moving, it's been pretty terrible to trade. Doge. Yeah, I know there's no market Friday. It's Good Friday, but I'm not talking about this week. I was talking about like next week or something. It'd be over here somewhere. If you heard me say something about Friday, I was talking about later, maybe on Tesla, like way later. Let's see. SLS. Yeah, let's take a look. Thoughts on Ford? That's a good one. Yeah, so this is one of those that just didn't do either. It went kind of right in the middle. You know, it's strange how that happens so many times where like I'll draw something and you guys are like, well, sideways is just sideways. Anybody could say, I know that. But what I'm saying is like the targets often are like halfway. This is a pretty close average, which is kind of strange. So there certainly was an even amount. You see from the time that we charted it, it just sort of chopped through that lower area, didn't really go anywhere. So I'm going to focus less on like where I thought it might be, because clearly that was wrong. I'm going to focus more on maybe the potential that it still gets to those places. Yeah, this just looks like a extended cat ear. You can see the motion build out. So it's already done the cross up. Now it's trying to like do the second ear. So it's hard to judge where it's going to land, but I think it's already probably where it needs to be. So you can see that push up above here is a retest of this zone. You probably could go as low as $1.15 or thereabouts. Really right where this took off. So it could back up to that area and still be semi-bullish. But I'd be really careful if this doesn't make a higher high here. It doesn't look like it is. Yeah, if it doesn't make a higher high, I think it's bearish. Because when you look at this on the big picture, yeah, there's a cross down that happened. That's pretty evident. And then you can see that locally there was this guy. But there's a bigger one here. That would be concerning. So if it doesn't make a higher push, this is like a massive potential hook. If it can't breach that top, then you're in trouble. So this becomes like a pretty big sign of weakness. Oopsie. So in order for SLS to be bullish, it needs to make a higher high than like 128. I know it's pretty close. Make sure that's right, the right number. That's 125, 127. Might be 127. Needs to make a higher high than 127. Oh, it's not going to let me do it, is it? I would say just say 128. I think this is garbage. Let's just say 128. It's like a millipenny away, whatever you call it. So it needs to come up above 128. It has to make the higher push here. If it does that, then coming back down, it just has to make a higher low, and it could then continue. And it doesn't even have to be that low. It could be wherever, as long as it makes a higher low. And that could be a pretty strong inverted head and shoulder type recovery. But I'm inclined to think if it does not, then this is very typical of what we've seen is like an S curve that forms into a bigger S curve. And it usually happens because there's no pushback up. So especially right in the middle. So I would look at this as like, oh, that's all the S curve. It's done. It's ready to go. Not yet. It has got to make that higher push. And it may only be a penny off, but a penny off is a penny off. So it means it didn't get there, you know. And the question I always ask myself is, if bulls really wanted to go, they can't push it 1 penny, you know, or they can't push it like 2 pennies. Like, really? Is that what you're trying to say? Is like, oh, it's still bullish, but they just missed it by a little bit. No. Like, if it's bullish, there's definitely going to be strength. So after that point in time, yeah, this is also an SOW. You see it punch below. So if it cannot do that, this is probably going to break down. I would guess it's going to be kind of slow, but maybe looking at the earnings report would be helpful as a potential place to like kind of walk through here and then drop again. I don't know. On or after earnings. Yeah. I think this just turns into a larger S curve is what I'm trying to say. It's pretty straightforward. And I do think this original target way back here, maybe not the best target. And again, it kind of plays into the idea that this could be a middle, which is bullish. Like, oh, it's actually the middle of an S curve. It is. So if it's not the target, I usually think it's probably a pretty important pivot definitely seems quite right in terms of a pivot, but I don't really know how to say this except just to say the confirmation is the higher push, so that's still the same. If it doesn't make that higher push, then I still think it's probably going to end up back down here at some point in the future. And it would be difficult, but we'd have to kind of go back through the motions of... This could be really long-winded. Yeah, this could be really boring. I messed up that line. But it's roughly like right there. Very, very boring. LSPY, LSPY, and then it finally like hits the bottom. It'll go sideways. If it goes sideways here, it's not really any different, because even if this just goes sideways instead of down, it's even more dangerous, because then you're unlikely going to get some kind of massive flush. Sometimes what you see in these S curves is, it's pretty regular and then it just suddenly changes. And what I mean is, like, it's regular like in the middle and then it suddenly changes to really accelerating at the end or the beginning, because that's naturally what an S curve does. But what we get misled into thinking is we get kind of complacent when it doesn't go down right away. And we think that means that it's not going to go down, and it is. And so sometimes it might be like, well, it's not following the S curve, it goes this way. And it just sits here and chops for months on end, and everybody's really excited about it, and then all of a sudden it's like, oh, it's going to go, and then it jumps the other way. And you would look back and be like, I don't get it, There probably would have been something in here that would have let you know, but this is just an example of something that could happen in this case, because this does happen quite often. You think it's not going to get there, and then it just rapidly accelerates. And later you look back, and you're like, well, I drew my S-curve a little wrong, and it was actually here. It built support out on that S-curve, and then it pushed away from it. Yeah, that's pretty normal. So the first move was very dramatic on the S-curve. That's why I'm looking at that. So it would not surprise me. Now, if it goes up, it has to make the higher push. It has to make a higher low. Once it makes the higher push and makes a higher low, there's a good chance that it would then just have kind of a new squeeze moment. Bullish from that point forward would have to be fairly dramatic. It just is. So you'd be looking backwards at some early trends maybe, with the possibility of kind of leading into those. I'm just kind of looking directionally. They all look kind of like parallel to me, but usually I like to do like bottoms to tops or bottoms to breakdowns. Yeah, I mean, you could be talking about pushing back up to like $2. I just don't know if I'd count on that based on the way it's working right now. It could change tomorrow, it could change today. But right now it didn't quite make that push. So is it guaranteed to go up if it makes the push? No, because it could make the push, make a higher high, and then make a lower low, or fail to hold another level. I don't like the idea that it's both of them have to happen. So it's just a checkbox. You need both checkboxes. If you're already in it and you bought in low, it's a good trade. You're done, Maybe you ease out of it and you just see what happens. If you're not in it and you're curious about it, it's really more of a wait and see. Like, I don't see why anyone would want to rush into this one. There is an interesting point at 138. don't really see much else right now. That's as much as I can do. $4 to $5. Well, yeah, I mean, looking back, this is clearly like not what happened. We had I guess we had done some information. We had found some information here that there was a convergence right here around $5. If it's a squeeze moment, could that still happen? Sure. We just started. Like I said, if it makes the higher high, I don't see why it can't go really far. I'm just looking locally. I'm like, well, it doesn't seem like it would necessarily have to go beyond 2. But, big picture, sure. If it holds that jump at 2, well, it's going to go up pretty far. If that level at $2 is this range. And then you look beyond that, the next range is up here at like 380. It moves pretty fast. So big picture, do I think it could have some kind of massive rally? Yeah. I think we looked at this as a possible rotation. And this could be like a big squeeze moment for this rotation. Certainly is a possibility. It's also very possible, and I definitely think that there's reason to speculate every time, but it is possible that I'm like off. If you pick like the higher trend here and just say, oh, I didn't ever get there, well, that leads to like a later time, right? So, and then if you look at this and you say, well, I think that was the cat ear, but then if you look at it, it's like, no, it really was here. Well, again, that leads to like a later time. So what we may be experiencing to some degree is like a pivot point that we think is like really important, and it is, probably. I don't think these are, what I see them as is like on a wave, you've got intersections, and some of them are going to be absolutely directional for price. Others might be more of like a rotational motion, like almost like a circular or radial motion is the right word, around a particular point of interest, that you just don't have the liquidity to get there. You're not just going to magically get there. So certainly, like, you could make an argument this does get to 5, but it doesn't do it till January 2026 or something like that. In which case, you've got a long time to I just changed it just barely, and it immediately kind of like looks correct, right? I mean, that's a dangerous thing, because it's just the difference between this top and this top, but it changes like everything. So it really depends on your perspective, I think, what you think is more valuable and more important information-wise. And then that does potentially affect the way you view this, on a rotation. I think I measured it out to this as the middle, but you would have to measure it to this as the middle, which effectively increases the length of time it takes almost perfectly to that next point. If you're patient and you're doing something long term, you probably don't care that much as long as it goes eventually. If you're looking for like a short-term swing, this may look like it's getting ready to go up and then head south. And this might even just be the tip of the iceberg. For all we know, there could be a new low. This did have a second low right here. So, for all we know, this thing could be dumping off a cliff, and then all of a sudden it just goes the other way. We're just not there yet. So I have to wait and see how this sets up. If it is a cat ear, it'd be easier to see once that's done. So remind me, if this ends up setting like a cat ear, let me know. I'll come back to it later if we end up getting this kind of sideways action here and then a drop, because it would be really helpful to see where this was. Like, the angle here is going to be really, really important. Big picture. There's nothing there to look at right now. Yeah, that seems about right for like a middle. 1, 2, and then 3, 4. I don't think any of this is particularly bad charting. It's just timing is tricky. We're going to talk about this as like more of a center mark, as opposed in like a pivot, as opposed to like a the peak, which would have been, you know. I'm genuinely surprised every time I see another chart that looks like February 2026. I don't know if it's just that easy or if I'm like I'm just wrong about everything. Because like, what is it? You know, is it really that easy? Are we just gonna have like a market wide squeeze into 2026? Is it that all there is to it? Doesn't matter what you're in, you're gonna be fine. You know, most of them are gonna do pretty well. It kind of seems that way. I mean, it really does. I feel like really odd about it. So, well, if we pass 128, then you're gonna watch the setup and see if it can hold its weight. A distribution here, a distribution there, it doesn't matter. I know that sucks, but it is what it is. If it goes above here and it makes a higher low, it's likely going to continue. Then you wait for a creek break. That's your buy-in. That would be like over here. And it goes up pretty far. It could lead to like 150 or 2. That's what I was saying. But then we really don't know the extent of what happens next, because this could still end up doing the same kind of thing. It looks like it wouldn't, but you just don't know that. Well, you can't know what you can't know. And you're going to leave a creek behind also. That's potential for disaster later. So a chart has a progressive setup, and this is one that you're like, oh, well, it could leave. And just where it took off right here, that big gap up, that looks like it's already pointing towards this low to me, which is almost the same exact spot. Like I put it right there, you can see where that pop was. So yeah, I mean, could this come back up and distribute at $1.50 as opposed to distributing here? Yes. That's what I'm saying. Like, it's never like one thing. I'm just saying like that's the first step for anything bullish, has to make that push up. It might be wise to say that every bullish trend has to start with that simple reversal of direction, but not every reversal of direction ends up being a bullish trend. So there's overlap, but they're not like tied to each other the way that some people think they are. So if I say it again, every single bullish trend will always start with the higher push and then the higher low. So the higher high and the higher low, because it has to change direction. That's simple. It has to be a change of character. So every single time there's a bullish trend, there's going to be something like that happens. It will happen. But not but every time that happens does not mean that you're going to have a bullish trend, because not every higher high and higher low does lead to a bullish trend. They just don't. Like, here's an example of one. This isn't even a higher high, but it made a higher low. And then look, higher high, this could be thought of as a higher low, but then all of a sudden it just goes south. You know, and so there's like just little moments of like this inconsistency. But I think that's because the market's is a constantly evolving thing that's always trying to trap people and mess with people. And there's always like a kind of the secondary trap motion. Yeah, so we dipped into that point, but never got there. I'm curious to see if it just goes or if it's going to build out. But it certainly looks like it tried to do it. This looks like a hot mess. You don't see this kind of stuff a lot. Oh, look at that. What a mess. Kirk, like Star Trek. Right, so I guess you don't want to see a hook here, but if it doesn't hook, AMC should be in good place. What makes it a mess is the barcoding nature of it and just the super low volume. Kirk. Captain Kirk. Kirkland's. I know that place. Do you? Oh, maybe I do. I think it sounds really familiar. Like I've seen it before somewhere. Hey, SPY's doing something now. It's going more upward. Yep. I don't think it means a lot just yet. Just gotta wait. Let's wait it out. It really needs to have another melt up, guys. Says who? I don't know what this is, so. Why does that sound so familiar? Do they make like bread or something? Kirkland's. I keep wanting to say like Kirkland's Best or something like that. I'm not sure what I'm thinking of. AMC's up 0.5%. Okay. Or is it eggs? They make eggs. Is that where I've seen it before? They make eggs? Yeah, maybe they make eggs. No, this Kirkland's is home decor. What am I thinking of? It's all the same. It's all home decor. All right, forget it. Well, I know what I was thinking. I was thinking something else. It's a Costco brand. All right. Yeah, I don't know anything about it. I must have seen it signed somewhere, but so it looks like every financial crisis is kind of just taking this thing back down to its bottom. Which, you know, pros and cons, I guess. LPSN. I don't know. I don't think I am. Oh, it was in Logicmark, but that one like tanked, went to 0 or something. Went to like 1. I'm not in anything else. I don't play the penny stocks very far. So. Wow, this thing really has gone between like 50 cents and $20. Well, I don't know anything about it. Let's take a look at this, just basic stuff. So EPS mostly negative. That's weird. Revenue's been pretty decent. Yeah, so I mean, if you imagine this never happened, this COVID thing. Imagine it never got that bad, right? And this went up twice above the top. You'd probably think that that was a UTAD. like a distribution and up thrust after distribution. But I don't want to pretend that this is simple, because in some ways it's not. There's a lot going on here. So, like, it is and it isn't. It'd be easy to say, like, oh, it's distribution, that's it. But this is a long chart. So, I mean, there's a lot going on in these regions. And certainly you probably wouldn't care if it goes to 20 again versus going to, I don't know, 6 or 7 again. So, all right. Well, if it goes to 50 cents again, I think there's a decent chance it's going to come back to 2. If it somehow reverses sooner than that, we may see $4 again. So that's a sensible, pretty straightforward analysis here. So again, if it comes down as low as 2 or as low as 50 cents again, it probably does something weird and then it comes up. I think there's a good chance it's going to revisit that trend. If it breaks out sooner, it's kind of a momentum trade, because all that has to happen again is it makes a slightly higher high. It could do that on a pretty small scale first. So I could just push over some of these local ones and then check this floor at like 138. But I would assume that it would kind of push up here, make a higher high, and then check like 138 or thereabouts. I think it could easily go back up to 4. It's divergent on the weekly, like locally. It's having a little bit of trouble holding on. It looks kind of like a head and shoulder almost, but so my only concern would be that this is gonna be divergent, but it still has downside in store. We just don't know. How do you know? Well, simply put, you just watch creeks develop. So at the end of the day, it's not going anywhere if it doesn't jump these. And so it's easy enough to just kind of create some markers for yourself and then determine if it's going over them or not. Yeah. So if the market does have a kind of squeeze moment going into June, this could be the upside that makes or breaks it. So if it goes up to $1.80 and it fails to make a higher high, then I think you're going to see it kind of crap out and probably come down pretty low. Maybe fairly rapidly, but would finish that S curve. So I think that's more likely to happen over here. And January and February could be some kind of massive pump, but it ultimately would only end up coming back up to like 180. It'd retest this floor somewhere over here. Wherever this leaves off, probably leave a trail behind, and then that's where it'd come back to. So they would have like a drop here. And then invertedly, if this kind of comes up above and then comes back down, I think you're looking like a secondary breakout. It's possible that this takes a really long time, where you have like a more major reaction off the bat, and then it takes a really long time on like a flag to kind of build out. And that's certainly possible as well. So I know I'm saying it goes all the way up, but timing isn't really 100% like it has to be this way. Some of that's based on this initial drop down, and then the concept of a trend here that's then used retroactively like that. And I think that that was the idea of that I was trying to implement. It was like, well, if it goes and meets that trend directly, then it just pops, hits this, and goes straight up. But the middle of the road one is not to be ignored. I think it would be easy to overlook that possibility. It just doesn't quite get there. So do I think it's a good buy right now? Not quite. It's like almost there. If you bought it now, I probably would only like hold it for like a month or something and just see what happens. Because by the time earnings comes around, this should have already developed out. There's a decent probability, based on the way this is, that this does come up to at least $1.65 from where it is. Even if it drops a little bit lower, I think it could come up to $1.65. So this still could be a pretty decent trade. I gotta say though that long term, it may look like this is super bullish because it's divergent, but I think if it hit that $4 and this is overbought, I think if it comes up to here, I think I'd be like done. I just would not ever look back because I think what this would end up doing is creating this is the space between two ears kind of system. And I'd be very curious to know if it does cross over, but I wouldn't want to sit around and wait because it could be an indeterminate amount of time. And you could still have like a downside later should this not, like if it broke out there, for example, at that 165, this could still come down low, like at a later time. So real low. And you wouldn't want that. You wouldn't want to wait through that. Well, it could hold on and just go up. Yeah, I know. But if this thing's in like a breakdown mode, there's a lot of problems. So I'm just looking at the big picture. Like I still think that could have been in a UTAD type setup. And home decor may not go away anytime soon, but if we're going into like a crisis, economic crisis in 2026, it'd be pretty easy to see how this could like slump down again, you know? So it's just a matter of timing. But yeah, I think there's a decent chance this is going to hit 170, maybe 165. And there's a decent chance this is going to hit somewhere around 370 to 4. I do. Oh, AMC is moving. I thought you were going to take a lunch, Booksy. You never took a lunch. Nope. Sure didn't. Well, I'm glad I bought all these calls. They're not moving. They're still red. I was surprised there, but that is a creek jump, and it's a nice jump. This is a good sign because this is a nice jump on an iterative motion. So, and then the pivots were right here, which is that low. So, I mean, that's kind of where everything was pointing. I'm not going to count out the fact or count on the idea that it could go back down, but that certainly was the zone. We had it like pinpointed and it didn't get there. So we'll see. This is a good sign because this is an ice that it ultimately pivots and wraps around and it broke out of. So when you look at the big picture, That could be a very good signal for us as a repetition of iteration, because the next ice is way up here on those iterative motions, way up here at 308. We'll see. This is one of those that I have to kind of wait on. I think I bought in like right over here somewhere, so I'm just kind of chilling out on it. Tesla hasn't really budged, but it's also not looking terrible. I'm curious if SPY and IWM are moving now. A little bit. They're showing some life. They're both kind of stuck. I'm personally liking this a lot, though. I really am. I think this looks really good. But I'm also going to just kind of wait it out. So I'm going to go ahead and go. It's like way past lunch, and I'm hungry, tired. You said 350. What about 350? Oh, I was talking about another stock. I don't know if you were listening. I was talking about something else. Jumping back to AMC, yeah, I think it comes up to 307, and that's where that crossover needs to happen. But we already identified that earlier, so this is just confirmation of that in my mind. This would be like a double cross, so there'd be two crosses here that have to happen, and it's wrapping around 307. If it doesn't happen, it's going to just come right back down, period. It's kind of like a head fake motion. If it gets there, but it doesn't quite reach, I'll just move it over. But in terms of like the setup, it was a good setup for a trade. That's a big trade. I mean, you're talking about from here up to like 350. That's like 20%. I mean, I'm not going to complain about that, you know? Some people don't like it, but I don't care. Now, I was talking about this other stock we were looking at, which is Kirkland's. Similar numbers, but not the same. 384. Yeah, I'm feeling it right now. I'm feeling like this is going to be a good thing, but I don't want to get ahead of myself. That's bullish. Divergence. Oh, maybe it's not divergent. No, not really. Well, it might be. It's a hidden divergence if the RSI is resetting lower, but the price is higher. So it depends on how it goes. I think it's going to be good. I'm only really worried about this guy. That's why I'm not sure. We may still get this kind of dump to 531. Timing's hard to guess or to estimate. Well, if we do get a dump, it'll probably be here Wednesday. But other than that, I don't know where else it would be. We still need another dump down. I don't know if it needs to go that low. I feel like it's done. 1, 2. Maybe that happens in a different way. See, that timed out really well. That wave is like spot on. It's perfectly distant. Yeah, there could be another drop down that's not actually here. I guess I sort of assumed it would be here, but there might be another one just because of the way it's set up. There may be another if it goes up first, like here. So you could have it pump up and then have a really nasty pullback, like right there. So I'm just thinking about it out loud. So in theory, there could be like a really bad drop here. Yeah, that actually does make some sense too, because that would be a cross up and then a pull back down. And then it goes up. Hopefully. AMC is a little different. I'm not really looking for anything too crazy, but I do think it's time. Honestly, like just staring at this chart, I see this as extremely high probability that this is going to come up to this mark, because that gap down was left behind. I do see this as a very, very likely setup here. It's not going to stop till it gets there. There may be a, in this, it's like, well, does it have to be in one move? No. I mean, there could be something else that happens, in the interim. And if there is some kind of a big pump and then dump midday Wednesday, this could still be a possibility, but I'd still be waiting for that move. I still think it would happen. So, anyways, I'm going to just stick to it. Still bullish for the short term on everything. Long term is very different. It's not as clean. So, but yeah, short term, I think this looks fine. I'm kind of glad it broke down here and just widened it out, because that to me is kind of a given that was going to happen. As soon as you back down again later, it'd have to have some kind of a weakness here. So I'm glad it's now and not later during the middle of some move. This is okay with me. We'll leave that later. Worry about that some other time. Is it? That's good. I'm glad Tesla's moving. Needs to move. Yeah. Squeeze. It's never even made it to the top. Yeah, and in theory, though I don't want to get too deep into this, in theory, if these are breaking out in what we would say is like an iterative fashion, the approach here should be a very similar approach to the next peak here, which would be, maybe it doesn't get all the way up there right this second, but it would be like coming up to like 330 or something, or 320, and then doing it again. Sort of like another wave up. It could end up being like a larger, which makes sense because this would be like a larger M shape here, like one having another one. So if it doesn't go all the way, I think what it probably does is it stops at like 320 and then does a similar motion here, but maybe a little more vertical. And then the final motion is like the bigger kind of squeeze motion. Yeah, that makes sense. Actually, that would make a lot of sense because this would end up being around this top. I don't know. The last motion is the tricky one, but it's the same as this guy. It's just like push up and hooks. Well, that would stink if it only got up to like 320 and dumped. Be much weaker than expected. I really don't know why you wouldn't go back up here. Well, the key is just to hold the level. You just don't go back down through that level. $1.88. I don't think there's a lot of complexity to this. I think it's pretty straightforward. Well, if it comes up to 320, I'll have to wait and see what happens. But if it comes up to 320 and drops, or 325, 330 and drops, my thought is that it's going to go back and retest a similar marker, but I don't really know where that would be. It could come down very, very low. It could be like all the way back at 3 and then take off from 3 and head up towards 350. So there could be some very, very strong shakeouts. I wonder if they're just doing this to space it out more. Probably. Maybe 305, 310. So I would not be surprised if it stops short of a real rally and doesn't go beyond that initial kind of 3. I think we talked about this previously. There was a lot of interesting things going on around 320. It would not surprise me if there's sort of a second M here that's not expected. Or not as expected, because the final move, and especially if you're building outward, the final move could be as steep as you need it to be. You really need to get that OBV up. I mean, I keep talking about the same things, but so I'd like to see some bigger moves, bigger pullbacks, not like a big move that just kind of dallies and doesn't do much. But I'm just kind of look at those levels and I'm like, yeah, that would make sense. And it's kind of intersecting this other trend here, which also makes sense. It did the same thing here when it approached that one. This is an iteration. This is an iteration. So if you're kind of returning back to those iterations and you're working outward, you're done with the downward iterations. Now the outward iteration matters. So that flow would be probably similar from one to the next to the next. Like you'd have a flow up here and then a flow up here and then a flow up to the final. I don't know if we're ever to get past 350, y'all. There's got to be some kind of a massive push at some point that really brings people in. But it's got to, I don't know, the way they're doing this is so slow. Maybe it would just be this final crazy motion. Hard to see it. I don't know. There's probably something I'm missing. Yeah, I think 360 is still the low. All right, well, on the whole, I'd say I'm looking for a bit of a squeeze motion today and tomorrow. Doesn't have to be perfect. I might get a drop first, for example, on SPY, in which case I'm probably going to buy in, but you guys got to do what you got to do. I would be interested to see what happens if it drops first. I think that'd be better, almost better for the market, but we'll see. Yeah, it's tricky, man. Tricky. All right. Have a good afternoon. I got to go. Not watching the last bit. Maybe it's going to be really exciting. Hopefully it is when I get off. Hope you all have a good one. Talk to you later.